Hello future chartered accountants. I am Anushri Agrawal, a chartered accountant and a company secretary, and I am here for you with a brand new batch altogether, the Law Workout Batch. After the super success of the DT Workout Batch, I'm finally launching the Law Workout Batch for you. Now, I'll quickly tell you how exactly we're going to go about this, what will be covered, what will we be doing, what is a whole plan of action, and then without wasting any time, we'll dive straight into the chapters. Alright. Now, point number 1, with the Law Workout Batch, you would have received 2 sets of handouts as PDF. They are downloadable, they are printable. The number 1, you will be having the descriptive questions handout, and then you will be having the MCQ handouts as well. In both of them, you will have good number of homework questions. As many questions as we discuss in class, if not more, equal number of questions you will have for homework as well, so that you can judge your understanding. Alright, so this is number 1. Number 2, when we do the Law Workout Batch chapter after chapter, when we take the questions, we will not be talking too much about presentation and all, because if we start doing that for each and every question, then we will not be able to finish at all. But however, I know for a fact that you do need to understand about how to present your answers. You do need to know how exactly to write your answers, what is required, what is not required, and that is why I will make 12 hours of writing practice complimentary for you along with the Law Workout Batch. If you look at your app towards the end, the last folder will be your writing practice folder, wherein 30 important questions you will be actually writing with me. And when I say writing practice, I'm not just going to discuss presentation. Presentation is not something which can be discussed. Presentation is something which has to be shown. So I will be writing the answers with you. You will be writing the answers with me for 30 questions. That will get covered for you over here. So when you're doing the questions with me in the Law Workout Batch 1 by 1, don't be tensed about presentation, because know for a fact that that will anyways get covered for you in the writing practice. Alright. Then your Law Workout Batch will also include 4 tests, wherein you will have one test for 25% of the syllabus, another test for 50% of the syllabus, another test for just other laws, and another test for your whole 100% of the syllabus. Alright. Then please watch the chapters in the same sequence in which I am uploading, alright, because there will be interconnections between the chapters, alright. And I am hoping that you know that the Law Workout Batch is not for a first time learner. If you are a first time learner, you may not be able to catch up with the pace. It is not for first time learners, because for first time learners we have the regular batch instead, alright. So this is for relearners, for students who need some solid revision before the examination, as well as a good amount of questions discussion. So your coverage over here will be a very in-depth concept revision, alright. When I say concept revision, I'm not going to be just revising with you the known concepts, the easy concepts. We'll go in-depth, alright. A nice concept revision, just like how we do in the DT Workout Batch, guys, you know it. And then we're going to do a lot of questions. In law, alright, listen to me very carefully. When it comes to your law paper, in your group 1, it is the most scoring out of your 3 papers. If you look at your 3 question papers, your law question papers difficulty level will be comparatively lesser than tax and advanced accounts. Alright, so if you prepare for it a little smartly, you can easily aim for an 80 plus in your law paper. Yes, it's a theory paper, but still 80 plus is possible. I myself had scored 80 plus in my CA intermediate. I've had so many of my students in the past scoring 80 plus. So yes, this is possible, alright. And this will give an instant boost to your total score, will help you cross the 50%, will help you cross the aggregate mark as well. Now, when it comes to law, if you want to score this 80 plus, not only should you be good with descriptive, you should be equally good with MCQs, alright. And that is why in our Law Workout Batch, we will be doing a very good number of MCQs as well, that is case study based MCQs also, alright. You'll understand as I do the chapters one by one, you will see it, alright. Then once we are done with all the chapters, towards the end, we will take up, like for example in DT, towards the end we do total income, right? With total income, all your chapters get revised once again. Similarly, once we are done with all the chapters, towards the end, we will take up 10 to 15 big case study based MCQs, which are touching upon several chapters. Like in the same question, You will have something from accounts of companies, something from management and administration, something from general clauses act, like that. Okay, so that will give you like second revision of the chapters once again. That we'll do towards the end. All right. So I'm pretty excited about how you're going to ace the paper of law. I'm very excited that how you're going to gain so much confidence through this workout batch without wasting any time, with a very clear objective in our mind that this is what we want and nothing lesser than this. Let's begin. We'll start off with our very first chapter, basics and kinds of companies. See, you will find this word workout batch being used everywhere now. But with this one chapter itself, with the very first chapter itself, you will understand why ours is the OG workout batch. Alright, the kind of depth in which I'm going to take you, the number of questions I'm going to help you do, the kind of clarity you're going to get will be unmatched. Alright, so your only objective, your only aim now is going to be to listen as carefully as you can, all right, to grasp things as well as you can, and to dream high, to dream that you can score this. All right, do not have an average objective in your mind. When this is possible, we want this. Alright everybody, so with this objective in your mind, just ensure that you do chapter by chapter, session by session as nicely as you can. Absolutely nothing else you need, no marathon, nothing you need to watch, because concepts also will get revised, questions also will get done. This is going to be your perfect exam oriented session. Alright, let's begin. Hello guys, starting off with our very first discussion now, kinds of companies. Very simple discussion, easy discussion, you know it very well, easily we will be able to finish it. Let me first start off by telling you that what are going to be your areas of focus first of all. See, in the kinds of companies, the most commonly asked questions are from one-person companies, then holding subsidiary companies, then your listed, unlisted companies, that discussion, and then from small companies, and sometimes rarely from Section 8 companies. So we will be doing all of these 5 categories of discussion under kinds of companies. Okay, first let's focus entirely on one-person companies. Very important from the examination point of view, and very easy also. If you get a question from here, it's like lottery only for us. Okay, so let me begin. See, in this one-person company discussion, totally 4 topics I will discuss with you inside one-person company. Out of the 4 topics, 2 topics I'll discuss with you first. We'll discuss some questions and then we'll do the remaining 2 topics. Okay. Let's start with some basics about one-person company. First of all, in a one-person company, totally how many members can there be? I'm going to say that totally there can be 1 member only. I'm not saying minimum 1, maximum 1, I'm not saying. I'm saying 1. 1 and only 1. There cannot be more than 1 member in a one-person company. Point number 1. Point number 2, how many directors will be there in a one-person company? Here I am saying that there will be minimum 1 director, which means the one-person company can have more than 1 director also. Then you will ask me, ma'am, then maximum how many directors company can have? The maximum number of directors in companies is not a part of your intermediate syllabus. You will be learning that in your CA final only, but just to satiate your curiosity, I'll tell you now itself, the maximum number of directors in any company is going to be 15 maximum. Okay, and this also the company can increase by passing an SR, but this is only extra knowledge for you, so I'm not putting in the main point. Alright, so number of members 1, I'll say equal to 1, which means can't be less than 1, can't be more than 1, has to be equal to 1. And the number of directors will be minimum 1, which means we can have more than 1 director also. Okay, then in every one-person company's name, the word OPC Private Limited will be there, so that anybody who looks at the company's name, just by looking at the company's name itself, they're able to identify that, oh wow, this is a one-person company. Okay, so every one-person company, in the name itself, they will have these letters OPC. Now, why private? Why should they write the word private limited in its name? The reason is every one-person company is by nature a private company, which means, see, no doubt, in many places in the Companies Act, special rules and regulations are given for one-person company. We'll apply that. But wherever special rules and regulations for one-person company is not given, Whatever rules we apply for private companies, that only will apply for one-person company also. Okay, so one-person companies are by nature what? They are by nature private companies. Similarly, later when I do Section 8 companies, no, there I will say that Section 8 companies are by nature public companies. So one-person companies are by nature private companies, and Section 8 companies are by nature public companies. Okay, so this is an important point. Remember this, that they are by nature private companies. Okay, now listen, in these one-person companies, there is this concept of nominee. There's only one member. Now, what will happen if this member dies? What will happen if this member became of unsound mind? Then there will be questions raised about the continuity of the company, because only one member. So that is why, to avoid confusion and complication later, the law very clearly says that the member of the one-person company will have to appoint a nominee. Okay, so the nominee will be a person who will be appointed by whom? He will be appointed by the member only, and the member will appoint how many nominees? Only one nominee only. Is it mandatory for the member to appoint a nominee? Yes, it is mandatory. In a one-person company, the member has to appoint a nominee. And when will this nominee become a member? See, why are we appointing nominee? Let us say there is a one-person company. In that, this person, Mr. Pink, let's say he is a member of the one-person company. Now, in case this member dies, or in case this member attracts some incapacity, okay, then only whoever was appointed as nominee, no, this member, let us say this member, Mr. Pink, had appointed Orange as nominee. Okay, so if the member dies, or if the member becomes incapable means what? Like, for example, if he becomes of unsound mind, then in that case, this nominee who was appointed, this nominee will now become a member. Okay, just tried to give you a quick revision of the concept so that you're able to recall the points. So when will the nominee become a member? The nominee will become a member whenever the real member, the original member, when he dies or when he becomes incapable, then whoever was appointed as nominee, that person will become a member. Alright, in simple words, as soon as Mr. Pink dies or becomes incapable, Mr. Pink will not be a member anymore. So whoever is a nominee, that person will now become member. Okay, so now Orange has become member. Now Orange will appoint another nominee. So when Orange dies or when he becomes incapable, then that nominee whom he appointed, no, that person will become member. So like that story will keep going on. Now listen to one small thing. What mistakes are possible over here? Mistake number 1, this. Number of members equal to 1. Number of directors minimum 1. This you will remember, I am sure. Second mistake that is possible over here, listen carefully, okay. See, there's a difference between a rank holder's paper and the paper of any other student. There's a difference. A student doesn't become a rank holder just like that. There is something extraordinary in his answer. Now, through this workout batch, I am trying to help your paper reach as close as possible to a rank holder's paper. We are not doing any average preparation over here. I want you to do some top-notch preparation. When it is possible, we will try to do the top-notch preparation. So listen to me. A normal answer paper will say that nominee will become a member upon death of the member. They will just use the word death. But a rank holder will say death or incapacity of the member. So I want you to remember both the keywords, okay? So when will the nominee become a member? A nominee will become a member only when the member dies or becomes incapable. Both you have to write. Don't write just about death. Okay, so this was your first discussion under OPC, the basics. You've understood. Now come to this next discussion. Our next discussion is who can be member, who can be nominee. This pink, this orange. So who can be appointed as member, who can be appointed as nominee? The provisions are common. The same provisions which apply to member also apply to nominee. So we'll discuss them together. Okay, so who can be member or who can be nominee? First of all, the member or nominee, both of them, they have to be majors only. They can't be minor. A minor cannot be appointed as a member. A minor cannot be appointed as nominee. Not going too much in detail, not going into the logic and all that we've completed in regular course already. This is a workout batch. Focus will be on revision, recalling and practice. Alright. So member, nominee both have to be major. Second point, both have to be a natural person. which means can another company be appointed as member or nominee? No. Can an LLP be appointed as a member or nominee? No. Only an individual, only a natural person, only an individual only can be appointed as a member or nominee. Okay. Can a HUF be appointed as a member or a nominee of a one-person company? No. It has to be an individual only. Okay. So this point, remember this point very carefully. I'll be twisting this a little later. Then listen to the next point. The member nominee both, they have to be an Indian citizen. Mandatory, they should be an Indian citizen. Okay. And lastly, the member nominee, they may be resident also, they may be non-resident also, doesn't matter, both are allowed. Resident, non-resident can be either. Earlier there was a rule that member nominee has to be resident only, but this rule is not there anymore. So today if you see a member nominee, they can be resident also, they can be non-resident also, doesn't matter. But resident means what? Resident for the purpose of one-person company. See, in our intermediate syllabus, this concept of resident is there in 3 places, guys. One is here in one-person company. Second, later we will see in LLP. And third, we will see in FEMA. In all the 3 places, the meaning of resident is different. So listen to me carefully now. Later when we come to LLP, we'll again do a revision. Then when we go to FEMA, we will again do a revision. That way, we'll do revision of revision. But for now, listen carefully. For the purpose of one-person company, resident means you should have stayed in India for at least 120 days. For at least 120 days when? In the preceding financial year. Not in the financial year. I am saying in the preceding financial year. Understood? Easy, simple. So member nominee both should be major only, should not be minor. Both should be natural person, should not be artificial person. Natural person means what? Any person who comes into existence by birth. Individuals, guys, human beings. Then they should be Indian citizens only, and they may be resident or they may be non-resident, doesn't matter. Resident means should have stayed in India for at least 120 days in the preceding financial year. But whether you're a resident, whether you're a non-resident, it doesn't matter. Both can be appointed as members also, nominee also. Okay. Now listen, with this much knowledge, okay, we can handle 2 questions. Let's finish these 2 questions and then we will go to 2 more concepts under one-person company. So till now what have we learnt? That one-person company will have only one member, not less than one, not more than one. They will have minimum one director. They can have more than one directors also. Then the company's name will have the word OPC Private Limited in its name. Every one-person company is by nature a private company. Then every one-person company, the member will appoint a nominee. It is mandatory. One nominee only will be appointed and the nominee will become a member when? When the member dies or becomes incapable. 2 keywords, both you will write. Okay. Then we learnt whether member, whether nominee, both have to be major, both have to be natural person, both have to be Indian citizen, resident, non-resident, doesn't matter. With all this knowledge, let's try to handle 2 questions one by one. Look at this. Come on, read the question with me and see when you're reading questions, try to understand the question in very first reading itself. Because understand, in the examination, when you're rereading the question, you're ending up spending a little more time on the question than what is actually required. So get into the habit of reading the question once and understanding it properly. Same thing I tell you in income tax also. Same thing I'm telling you in law also, that when you read the question, read it once. So when you're reading the question, there should be no background music in the mind. Your entire focus should be on the question and understand it in one reading itself. Come on, read it with me. Examine whether the following individual is eligible for being nominated as a nominee of one-person company on 5th May 2020. So on this date, 5th May 2020, can this person be appointed as nominee or not? Whether member, whether nominee, same provisions only. The situation is, Miss Devaki is an Indian citizen, okay. She's sister of Mr. Raja who stays in Dubai and India. So she stays in Dubai also, she stays in India also. She stayed in India during the period from 2nd Jan 2019 to 16th August 2019. Thereafter, she left for Dubai and stayed over there. So there is this person, Miss Devaki. Four criteria, guys. If anybody wants to be appointed as a nominee, there are four criteria. Just now we saw over your four criteria. Number one, the person has to be a major. See, whether Devaki is a major or a minor, nothing is mentioned. We'll assume she is a major. Then number two, she should be a natural person. Yes, she is an individual, she is a natural person. Then number three, the third point was she has to be an Indian citizen. And the question does say that yes, she is an Indian citizen. So even this point is fulfilled. The fourth point says that she can be a resident or she can be a non-resident, it doesn't matter. Now in this question, if you see, is she a resident or a non-resident? See, you're supposed to look at the preceding financial year. So when are we trying to appoint Devaki as a nominee? On 5th of May 2020, right? So which year? This is going to be financial year 2021. In 2021, we're trying to do the nominee appointment. So what will be your preceding financial year? 1920. So I have to check in 1920, Devaki has stayed in India for how many days? Remember, when you're looking at this 120 days criteria, you will see the stay in the preceding financial year. So this is my preceding financial year. In the preceding financial year, how many days has she stayed in India? She came to India on 2nd Jan 2019, which is previous year 1819. So in 1920, if you see, from the 1st of April, she is in India and she's leaving on 16th August 2019. So totally how many days in 1920? April 30 days. May 31 days, June 30 days, July 31 days and August 16 days. So totally, if you add up, she has been in India for 138 days. Okay, in the preceding financial year, which means she's been in India for at least 120 days in the preceding financial year, which means she is a resident. But even if she was a non-resident, it would still be okay. We could have still appointed her as nominee. Understood? So, what's your final answer now? Can Devaki be appointed as nominee? Yes, she can be appointed as nominee. Now, if you want full marks for this answer, you should be writing all of these 4 points. That yes, we are assuming she is a major. That yes, she is a natural person. Yes, she is an Indian citizen. Now see, whether resident, non-resident actually doesn't matter. But because they have given information about the number of days for which she has stayed in India, they will expect this calculation. So we will do this calculation. We will say that she has stayed in India for 138 days. Hence, she is a resident. But whether resident, whether non-resident, she can be a nominee of a one-person company. Understood, everybody? So this was your very first question that we've discussed about who can be appointed as nominee. Now come on, have a look at the next question with me. Question number 4. Prashant incorporated a one-person company, making his sister Priya as the nominee. So Prashant is the member and his sister Priya, she is a nominee. By the way, does the nominee have to be a family member or a blood related? Not necessary. The nominee may be a family member, may not be a family member, may be a friend, doesn't matter, okay? So his sister Priya over here is a nominee. Priya is an Indian citizen, okay? She was born and brought up in Kanpur. This doesn't matter to us. She's an Indian citizen, that is enough. However, now Priya and her husband are leaving India permanently to stay with their son who settled abroad for the last 15 years. Due to this fact, she is withdrawing her consent of nomination in the said one-person company. Understood? Priya was the nominee, but she is leaving India. She is not going to stay in India anymore, which means she will not be a resident anymore. And because she will not be a resident anymore, she wants to withdraw her consent as nominee. She doesn't want to continue as nominee anymore. Taking into consideration the provisions of the Companies Act, answer the following questions. If Priya is leaving India permanently, is it mandatory for her to withdraw her nomination in the said one-person company? What do you think? See, I told you whether member, whether nominee. Same 4 conditions. Condition number 1 is Priya a major. See, the question says she is married and all. So, most obvious assumption, she is a major. Condition number 2, she should be a natural person. Yes, she is an individual. So, yes, she is a natural person. Even this condition is fulfilled. Number 3, she should be an Indian citizen. Yes, right now, she is an Indian citizen. Okay. And condition number 4, she should be a resident or a non-resident. That doesn't matter. See, if Priya is leaving India permanently, she is still a major. she is still a natural person. And let's say she is able to continue to keep her Indian citizenship also. Now if she leaves India permanently, okay, later she will become a non-resident, but that doesn't matter. Residential status, whether she's a resident, whether she's a non-resident, it doesn't matter. She can be appointed as she can continue as a nominee. So therefore, what is your answer? Is it mandatory for her to withdraw her nomination? The answer will be no, it is not mandatory for her to withdraw her nomination, provided she's able to continue to maintain her Indian citizenship. If she is able to maintain her Indian citizenship, then even if she is leaving India, she can continue as nominee, because if she leaves India, only one thing will be impacted, and that is a residential status, and residential status doesn't even matter. You may be a resident or you may be a non-resident, it doesn't matter. So does she have to mandatorily withdraw her nomination? The answer will be no. Okay, that's about your first subdivision. Now comes your second subdivision. In case Priya withdraws her nomination as a nominee, if she is withdrawing her nomination, whether Prashant can appoint his minor son as a nominee of OPC? The answer is no. You know very well, only a major can be appointed as a nominee, a minor cannot be appointed as a nominee. All these kind of questions, if they come in your examination, it will be literally like as if ICI is saying come take marks and go. Very simple questions, just straightforward application of the concept, guys, right? So just because she is leaving India, yes, she will become a non-resident, but for that reason alone, does she have to withdraw her nomination? No, she can continue as nominee. And can minor be appointed as nominee? The answer is no. Okay, so as of now, guys, we have discussed some basic concepts relating to one-person company. We have discussed who can be member and who can be nominee with respect to one-person companies. Two questions we've seen, question number 2 and question number 4. Now let's come to the next concept. Okay, here I'm going to be discussing with you about, can a person be a member in any number of one-person companies? See, the answer is no. At a time, one person can be a member only in one OPC. Only in one OPC. At a time, Blue can be a member only in one OPC. At a time, a person can be a nominee also in one OPC only. See, at the same time, can I be a member in two OPCs? No. I can be a member only in one OPC. At the same time, can I be a nominee in two OPCs? The answer is no. I can be a nominee only in one OPC. So, at a time, come on, repeat along with me. At a time, a person can be a member only in one OPC. At a time, a person can be a nominee only in one OPC. But at the same time, I can be a member in one OPC and a nominee in another OPC. That is allowed. See, I'll help you understand. Can I be a member in two OPCs? No. I can be a member only in one OPC. Can I be a nominee in two OPCs? No. I can be a nominee only in one OPC. But at the same time, can I be a member here and nominee here? Yes, it is allowed. At the same time, I can be a member in one OPC and nominee in another OPC. That is allowed. Okay. Now see, to help you get a little better understanding, I have 4 situations over here. Now look at the first situation. Can Blue be a member in A OPC and B OPC at the same time? Can he be a member in two OPCs at the same time? No. We learned a person can be a member only in one OPC. He is a member in two OPCs, not allowed. Look at my second situation. Can Blue be a nominee in A OPC and in B OPC at the same time? Can I be a nominee in two OPCs at the same time? Even for this, the answer is no. Now third situation, can Blue be member in A OPC and nominee in B OPC at the same time? Can he be a member here and nominee there at the same time? Here the answer is yes. Okay, because in this situation, if you see, is he a member in two OPCs? No, one OPC only. Is he a nominee in two OPCs? No, he is a nominee in one OPC only. So you can be a member in one OPC, nominee in one OPC, allowed. At the same time, both allowed. Okay. Now listen to the fourth situation. This is the most important situation over here. Let us say in A OPC, Mr. Blue is a member. In B OPC, same Mr. Blue, the same Mr. Blue, he is a nominee. First of all, will you allow this? Same Mr. Blue, he is a member in one OPC and he is a nominee in another OPC. You will allow this because he is a member only in one OPC. He is a nominee only in one OPC, so this will be allowed. Now what happened is, in B OPC, whoever was a member, let's say this member died, or let's say this member became incapable. If this member of B OPC dies or becomes incapable, then Mr. Blue, who is a nominee, he will now become the member, right? He was already the member in AOPC. Now he will also become a member in BOPC, because in BOPC the original member died or became incapable. So the nominee will become member. So Blue will become a member. So he is now becoming a member in two OPCs, in A and in B. This will you allow? This is not allowed. So when this situation arises, we will tell Mr. Blue, listen, take 180 days time. Within 180 days, he has to take corrective action. Corrective action means what over here? Corrective action means he has to meet the eligibility criteria. Eligibility criteria means what over here? Eligibility criteria over here will be, listen Mr. Blue, you have now become member of two OPCs, but you can be a member of only one OPC. So you pick and choose. Decide where you want to continue as member and where you want to leave. Okay, so corrective action has to be taken, that is eligibility criteria has to be met within how much time? Within 180 days. Remember this. Don't get confused. For residential status, the time limit was 120 days, and for this corrective action, for this eligibility criteria, the time limit is 180 days. Okay, so what is your concept now? Conclusion, summarizing. At a time, I can be a member only in one OPC. At a time, I can be nominee only in one OPC. But at the same time, I can be a member in one OPC and a nominee in another OPC allowed. But in the situation where I am a nominee, there if the member dies or becomes incapable, I'll become a member. So I'm already a member here and I've also become a member here. In such cases, I'll have to take corrective action, that is, I'll have to decide where I want to continue as member and which OPC I want to quit from. I'll have to decide that within 180 days. Okay, so corrective measure 180 days. This was another concept. Now listen to two more points and then I'll take you to another question. My fourth revision for you now is about conversions. Can a one-person company be converted into a private company? Yes, no problem. It can be converted into a private company. Can a one-person company be converted into a public company? Even here the answer is yes. So a one-person company can be converted into public company also. It can be converted into private company also. And when can you convert? At any time you can convert. There is no cooling period. There is no waiting period and all. Any time the one-person company can be converted into public company or private company, it is allowed. But where is the problem? The problem is in Section 8 companies. One-person company cannot be converted into Section 8 company. This is not allowed. See, neither can a one-person company be created to do charitable objectives. That is, a one-person company cannot be created as a Section 8 company. Also, it cannot be converted into Section 8 company. Both are not allowed. Neither can it be incorporated as a Section 8 company, nor can it be converted into a Section 8 company. In simple words, a one-person company can never do charitable activity. It always has to do activities with profit motive only. Charitable motive is prohibited in one-person company. Okay. Then there are two more prohibitions. So just now we saw one prohibition, which was it cannot have charitable motive. This indirectly has become one of the prohibitions of a one-person company, that it cannot do charitable activities. Apart from this, a one-person company is prohibited from carrying on NBFC activity, non-banking finance company. A one-person company cannot be an NBFC. It cannot do this lending activity and all, not allowed. NBFC, like for example Bajaj Finance, Muthoot Finance, they are all NBFCs, which means they are not banks. Bajaj Finance is not a bank, but still it's a non-banking finance company. It's not a bank, but it gives finance. So that becomes a non-banking finance company. So a one-person company cannot do NBFC activities. It cannot do finance activities. It cannot do lending activities. Okay. Then a one-person company cannot invest in another body corporate, which means what? Like one-person company cannot invest in the shares of Reliance Industries Limited. A one-person company cannot invest in the shares of Tata Motors Limited. So a one-person company cannot invest its money in another body corporate. It cannot buy shares of another body corporate. Okay. Now look at this, two situations. Situation 1, there's a one-person company, okay? In this one-person company, can Reliance be a member? Think and tell me. I'll wait for you. Pause over here, think and arrive at an answer. In a one-person company, can Reliance be a member? The answer is no. Why? We just learned, remember, that member of a one-person company has to be a natural person only. Right, guys? So, if the company is a one-person company, this is a company. In the company, can Reliance be a member? No, Reliance is not a natural person. Reliance is an artificial person. So because it is an artificial person, because of that reason, an artificial person cannot be member of OPC. So Reliance cannot be a member of the OPC. Now look at the second situation. In the second situation, it is reverse. Reliance is a company. Okay. In Reliance, can OPC be a member? Can an OPC buy shares of Reliance? Can an OPC become a shareholder of Reliance? Even here the answer is no. Why? This is a reason. A one-person company cannot invest in another body corporate. Understanding? So the conclusion is that neither can an artificial person, neither can another company be a member in OPC, nor can an OPC be a member in another company. Understanding? This might be a new point for many of you. The point is, neither can a one-person company be a member in another company, nor can another company be a member in one-person company. Reason? In a one-person company, all the members should be natural persons only. So another company cannot be a member of one-person company, because company is artificial person and all cannot be a member. Second point is, can a one-person company be a member of another company? Can a one-person company buy shares of another company? Even for that, the answer is no. One-person company cannot invest in shares of another body corporate. It cannot invest in another body corporate. Hence, even this is not allowed. Okay, so 5 concepts we have learnt about one-person company already. We learnt about the basics, we learnt about who can be member, who can be nominee. Then we revised about whether a person can be a member in multiple OPCs, a nominee in multiple OPCs. Remember, corrective action within 180 days. And then we learnt that one-person company can be converted into public or private company at any time. But a one-person company can neither be created as a Section 8 company. I'll write it for you over here. It can neither be created as a Section 8 company, nor can it be converted into a Section 8 company. Not allowed. Then there are 3 prohibitions we learned. Prohibition number 1 is that it cannot do charitable activities. Prohibition number 2, it cannot do NBFC activities. Prohibition number 3, it cannot invest in another body corporate. Okay, and because of this point, we arrived at a conclusion that in a one-person company, another company cannot be a member. In another company, OPC cannot be a member. In Reliance, OPC cannot be a member. In OPC, Reliance can't be a member. Both ways not allowed. Okay, so these were your 5 concepts. After this, I think you are ready to take up one more question. I'll bring the question to your screens. See, look at this, guys. The next question is an MCQ. It's a mock test paper MCQ. The question goes like this. Anu got incorporated a one-person company with her sister Alpa as a nominee. So Anu is the member of the one-person company and Alpa is the nominee of the one-person company. About 3 years have passed satisfactorily. From time to time, Anu does a number of charitable work and is associated with 3 NGOs. In the meantime, her business under OPC also has flourished. Now she is contemplating to convert the one-person company as a Section 8 company, that is a company with charitable object. Is this allowed? You know this very well. Can a one-person company be converted into Section 8 company? This is prohibited. The answer is no. We learned that neither can a one-person company be created as a Section 8 company, nor can it be later converted into a Section 8 company. In simple words, for one-person companies, charitable activities are prohibited. So which option would be right? Option A says, since company belongs to Anu, she has full discretion to convert. No, this is not right. Since company was formed as a private company, the only option available with Anu is to convert it into a public company. Even this is not right, because the one-person company can be converted into public or private. It's not that it can be converted only into public. That's not right. Then there is a specific prohibition on converting OPC into a Section 8 company. This is seeming to be right. There is a prohibition on converting OPC into Section 8 company. Otherwise, it can be converted into a private or public company without any hindrance. This option is right. There is a prohibition on converting OPC into Section 8 company. Otherwise, it can be converted into public or private. But OPC can be converted into public or private. It cannot be converted only into Section 8 company. So, option C will be your correct option over here. Okay, so and one more thing you must have realized, or you must have felt now, that we learned so many concepts, but all these were not even involved in this question. Only the conversion concept was involved over here. let me discuss one more concept with you, and then we will be doing two master questions, okay? One master descriptive question and another master case study based MCQ. So in those two master questions, all these concepts which we learned over here will automatically get used. Nothing goes waste, okay? No learning goes waste. Come to the next concept now. Our next conceptual discussion is going to be about nominee, and this is going to be a last concept discussion in one-person company, okay? So we've learnt about the basics relating to one-person company, who will be member, who will be nominee, we've learnt. Then at the same time, can a person be a member in multiple OPCs? Can he be a nominee in multiple OPCs? That we discussed. Then we learnt about conversions of OPC into other companies. We learnt about the 3 prohibitions. Alright, now come to the nominee discussion. See, everything about nominee will get fitted under this one page. There are 2 things which you already know about nominee. The 4 points, you know that a member nominee, both, for both you have common 4 points, that is both have to be major, then both have to be natural persons, then both have to be Indian citizens, and lastly whether they are residents or non-resident, that doesn't matter, okay? Then you also know this point that a person can be a nominee in only one OPC, even this you are aware of. Now this is where the new set of points begin. See, whenever a person is appointed as a nominee, okay, he has to give a prior written consent to the OPC, a written consent saying that he is willing to be appointed as a nominee. Prior, the word prior indicates he first has to give written consent, only then he will be appointed as nominee. Okay, so point number 1, nominee has to give a prior written consent to the OPC saying that he is willing to be appointed as a nominee. Then what will the OPC do? See, the nominee and all will be appointed at the time of incorporation itself. So at the time of incorporation, the company will anyways be filing a lot of documents with the ROC. No. Along with those documents, the OPC will inform the ROC the name of the nominee, who is going to be the nominee, his name. Then this written consent which the one-person company has received from the nominee, even this will be filed with the ROC. Fee will be paid to the ROC, and a copy of the MOA and AOA will also be filed with the ROC. Now, in the MOA of the one-person company, who is the nominee, the nominee's name will be written. Now, in the MOA, you must have learned, right, in the MOA AOA discussion, that in the MOA there are 6 clauses: name clause, situation clause, your object clause, liability clause, capital clause, and subscription clause. In one-person companies only, there is a unique clause which is there only in the MOA of one-person companies, and that is a nomination clause. Alright, so in this nomination clause, the name of the nominee will be mentioned. This point is unique only in one-person companies. You will not find the nomination clause in the MOA of any other company. You will find it only in the MOA of the OPC only. Okay, so the nominee will give a written consent to the one-person company saying that he is willing to be appointed as a nominee. The one-person company will inform the ROC about this. One-person company will send 4 things to the ROC: the name of the nominee, then his written consent, fee, and a copy of the MOA and AOA of the OPC. In this MOA, in the nomination clause, the name of the nominee will be mentioned. Okay. Now comes the last point under a nominee discussion. There are 3 situations where this nominee will get changed. Situation 1, when the nominee doesn't want to continue as a nominee and he wants to withdraw his consent. Like for example, let's say I have a one-person company and I appointed you as a nominee. You gave your written consent and all, and right now you are the nominee of the one-person company. But there's a possibility, that you might change your mind. The nominee changed his mind. The nominee doesn't want to continue as nominee. So can the nominee withdraw his consent? Can he cancel his consent? Yes. If the nominee doesn't want to continue as a nominee, he can withdraw his consent. He has to give a written notice to 2 people. He has to give a written notice to the member of the OPC and to the OPC. A written notice saying that he does not want to continue as a nominee. Then once he gives that written notice, he is not a nominee anymore. But in every one-person company, there has to be a nominee. Now the nominee has withdrawn his consent. So now the member will have to appoint a new nominee. Within 15 days of receipt of notice, he has to appoint a new nominee. Okay. So the first situation of change of nominee is when the nominee, he himself withdraws his consent. In the second situation, what happens is the member of the OPC, he decides to change the nominee. The member is changing his mind. Nominee is not withdrawing. The member is changing his mind and member wants to appoint a new nominee. Member wants to change the nominee. So the member will give a prior written intimation to the one-person company. I will simply give a notice to the OPC saying that I want to change the nominee and I will appoint a new nominee. Very easy. So who can change the nominee? Either the nominee himself can withdraw consent and then member will appoint a new nominee, or the member he himself can decide that I want to change the nominee. Okay, see, there are a lot of in-depth points, okay, over here. I don't want to discuss with you in this workout batch only the, most commonly asked points or only those points which you're already aware of. Like all these are little hidden points, and it is these kind of concepts, when they get tested in the examination, you start complaining that, oh, it was a difficult paper. See, the whole point is that if you're giving me time, I should prepare you, I should help you prepare for a question paper wherein even if the questions are difficult, even if the questions are unexpected questions, you should be able to handle. See, no point in giving you superficial confidence by doing only those concepts which you're already aware of. Then it's only artificial confidence, right? We will gain the confidence by doing concepts which we did not know, okay? So I was telling you that the change of nominee will either be by the nominee himself, he will withdraw his consent and member will appoint a new nominee within 15 days, or the member himself will decide to change the nominee. Now there is one more situation, okay, and this is the most common situation. The most common situation would be a situation where, let's say Mr. A was a member and Mr. B was a nominee, okay, and Mr. A died or Mr. A became incapable. So therefore Mr. B, he has now become the member of the one-person company. Now there is no nominee. So Mr. B, who has newly become a member of the OPC, he will have to appoint a new nominee. So this is a situation 3 where the nominee has become the member now, and therefore a new nominee has to be appointed. So in those cases, within 15 days, the new member will appoint a new nominee. Simple. So in situation 3, within 15 days of becoming the member, the new member will appoint a new nominee. Alright. So totally there are 3 situations. Now in all the 3 situations, a new nominee is getting appointed. In the first situation, the nominee is withdrawing his consent, so the member is appointing a new nominee within 15 days. In the second situation, the member himself has decided that let me change the nominee, let me appoint a new nominee. So the member is appointing a new nominee over here. In the third situation, the member has died or has become incapable, so the nominee has become member. So now the new member is going to appoint another nominee. So even over here there is new nominee appointment. So in all these 3 cases, the nominee is changing, a new nominee is being appointed. So whenever this happens, the OPC will have to give a notice to the ROC. Whenever there is a change of nominee, OPC will have to give to the ROC, number 1, the written consent of the new nominee. Then number 2, we have to give fees also to the ROC along with this form when we are filing with the ROC. Alright. And number 3, this is another very important point. See, I just told you, right, that in the MOA of the one-person company, there's a unique clause called nomination clause. In that nomination clause, we will write the name of the nominee. Now, when that nominee is changing over here, even in the nomination clause in MOA, we'll have to put the new nominee's name. So, will that become alteration of MOA? The answer is no. If the only alteration in the MOA is changing the nominee's name in the nomination clause, if that is the only alteration, it will not be considered as alteration of MOA. Now, with this discussion, all your conceptual revision from OPC is done. We have 2 master questions now. One master theory descriptive question, another master case study based MCQ question. Both we will discuss back to back. Ensure that you are listening with 100% focus, no background music, sit up straight and listen to me. The question says, Mr. Dan, he's an Indian citizen. He decides to start a software development company and opts for one-person company. He appoints his friend Mr. Rohit as the nominee at the time of incorporation, following all legal requirements. After 2 years, Mr. Rohit wants to withdraw his nomination. See, who is changing the nominee over here? Mr. Dan, he is the member of the OPC. Rohit, he is a nominee of the OPC. Read the question carefully. Mr. Rohit wants to withdraw his nomination, which means which situation are we talking about over here? Situation 1. the nominee, Mr. Rohit is a nominee, right? He himself wants to withdraw his consent. He doesn't want to continue as nominee anymore. It is situation 1. So in situation 1, what did we learn? What is the process? The nominee will have to give a written notice to the member and to the OPC saying that he does not want to continue as nominee. He is withdrawing his consent, and then the member will appoint a new nominee within 15 days of receiving the notice. Same concept only will come into the picture over here. So after 2 years, Mr. Rohit, the nominee, he is withdrawing his nomination. So then Mr. Dan is nominating Mr. Akram. So this is a new nominee over here. Mr. Akram, he is a new nominee in his place and submits the necessary forms to the ROC. So 3 questions they are asking us about this. What legal process must be followed when a nominee withdraws his consent? This is nothing but your situation 1, guys. In situation 1, 3 situations we had over here, right? In the first situation, nominee was withdrawing his consent. So what is the process we learnt in situation 1? Number 1, the nominee will give a written consent to 2 people. Number 1 to the member and number 2 to the OPC. To both, the nominee will give a written notice saying that he is withdrawing his consent. And number 2, the member will have to appoint a new nominee within how much time? Within 15 days. And then remember, in this left side, I wrote 2 common points also. Even these 2 common points will have to be written. These are common points for all the 3 situations. The common points are, the first common point, the OPC will have to give a written notice to the ROC, about the written consent of the new nominee, and will also have to pay fees to the ROC. And the fourth point, which is the second common point, that because of all this change, new nominee is appointed. Now even in the MOA, in the nomination clause, the old nominee, Rohit's name will be removed and Akram's name will be inserted, but this will not amount to alteration of MOA. So whatever procedure generally applies to alteration of MOA, all that procedure will not apply. This is your legal process, right? So these 2 points I spoke about and these 2 common points I'll write about. Alright. Then after this, the next question is, how does the change of nominee impact the MOA of the company? I already discussed this with you. That yes, when the nominee's name changes, in the MOA, in the nomination clause, we have to remove the old nominee's name, we have to put the new nominee's name, but this will not result in alteration of MOA. The alteration of MOA provisions will not apply if the only change is changing the nominee's name in the MOA. Okay. Then the question is asking us, can Dan, who is Dan? The member of the OPC. Can Dan own another OPC while still being a member of Dan Technologies OPC Private Limited? The answer is no. Remember, we learned at a time I can be a member only in one OPC. At a time I can be a nominee only in one OPC. But at the same time, I can be a member in one OPC, nominee in another OPC, that is allowed. But can Dan be a member in 2 OPCs at the same time? That is not allowed. Dan will have to pick and choose only one OPC only you can be a member in. A person can be a member only in one OPC. Okay. So this was your first master question. I am calling it as a master question because it covers the nominee concept also. It covers the MOA alteration point also, and it covers this important point that can Dan be a member of 2 OPCs? The answer is no. So before your examination, when you are revising this OPC concept, you will be seeing only the 2 master questions. You will not be seeing all the questions again, only these 2 master questions, this one and the next question, only these 2 questions you will be seeing. Most of your OPC discussion will get covered in just these 2 questions. Okay, then come to this next question. This is your master case study based MCQ. Nice big story we have. This is a November 2021 RTP question. Same thing was there in Jan 2025 mock test paper as well. So nice big story we have, and under the story there are 4 questions. Okay, come on, let's read the whole story first. The question says, Ramesh started a new venture of online business of supply of grocery items at the doorstep of consumers. Initially, it was having the area of operations of Jaipur city only. He employed some young boys having their own bikes and allocated the areas which they were accustomed of it for making delivery of the grocery items as per their orders. He also got developed a website and mobile app to receive the orders online. Useless para. Nothing over here was relevant. Then the question says his friend Sudhanshu, who is a chartered accountant, suggested him to corporatize this business firm from proprietorship business to OPC. Ramesh agreed and OPC was incorporated in the name of Ask Ramesh for Online Grocery OPC Private Limited. For short, OPC1. So we are calling it as OPC1. Now in this OPC1, who is a member? Ramesh is a member. In this OPC, Ramesh became the member and director, and Sudha, who is a mother of Ramesh, was made as a nominee. Understanding? So if you look at OPC1, member and director is Ramesh and nominee is Sudha. Okay. Then the question says, after a year, Ramesh got married with Rachna. Alright. Then since the business of online supply of grocery was on a rising trend day by day, he thought to start a new business of supply of milk and milk products and another OPC in the name of Rachna Milk Products OPC Private Limited. For short, OPC2 was incorporated with the help of his professional friend Sudhanshu. In this OPC2, Rachna became the member and director and Ramesh was nominee. So if you see, there are two OPCs totally, OPC1 and OPC2. See, this entire story that they have given till here, they have also given a summary. So all these three paras I will ignore. I will only look at this table now. So in OPC1, Ramesh is a member and Sudha is a nominee. In OPC2, Rachna is the member and Ramesh is a nominee. Now see, is it okay? Is it okay that Ramesh, he is a member in OPC1 and he is a nominee in OPC2? Is it okay? Yes, it is okay. Where is the prohibition? Ramesh cannot be a member in two OPCs. No, he is not a member in two OPCs. He is a member only in OPC1. He cannot be a nominee in two OPCs. Yes, he is nominee only in OPC2. There is no problem over here. At the same time, I can be a member here and a nominee there. That is allowed. You know it very well. Then the question says, after some time, Sudha, the mother of Ramesh, passed away. So which means the nominee of OPC1 has passed away. So a new nominee is required now. However, before the death, Sudha had made a will in which she mentioned that after her demise, her another son Suresh to be made nominee in OPC1. When Suresh came to know this fact, he argued with Ramesh to fulfill the wish of Sudha as per her will, but Ramesh denied this and appointed Rachna, his wife, as nominee. See, Sudha was a nominee. Now in her will, she wrote that after her death, she has another son Suresh. Suresh should be made the nominee. Can nominee decide that who will the next nominee be? No, all that is not there. In our entire OPC discussion, if you noticed, again and again I told you that it is a member only who appoints a nominee. So can the nominee decide who the next nominee will be? No, this is not right. So Sudha cannot decide that after her death, Suresh should be the nominee. That decision is incorrect. Now, so what did Ramesh do? Ramesh denied this and appointed Rachna as nominee. So now who is the new nominee? Rachna is the new nominee over here. Perfectly fine. Ramesh is member in one OPC and nominee in another OPC. Allowed. Rachna is member in one OPC and nominee in another OPC. Allowed. So even this para is fine. Then aggrieved from the decision of Ramesh for not nominating him, Suresh threatened Ramesh to take appropriate legal action against him for not honoring the will of Mother Sudha and consulted his lawyer. Will Suresh win this case, guys? He will definitely not win this case because I just told you the nominee cannot decide who the next nominee will be. It is only the member who will decide who the next nominee will be. So therefore the will which the earlier nominee Sudha has left, that point in the will not have much value. Then the question says, meanwhile, due to continuous threatening and hot talks between Suresh and Ramesh, Rachna became mentally upset and became insane. So what has happened now? Rachna has become incapable, guys. So if Rachna becomes incapable, what will happen now? If Rachna, who is a member of an OPC, if she has become incapable, then in that case, Ramesh, who is a nominee, he will become the member. So Ramesh will not be the nominee anymore, he will become member. Right, guys? Because the member has become incapable. If the member dies or becomes incapable, then the nominee will become a member. Now when this happens, there will be a problem because Ramesh is already a member of this OPC. He has also become a member of OPC2. He is now becoming a member of two OPCs. So now within 180 days, he'll have to take corrective action. That concept will come into the picture. So in this situation, Ramesh, being the nominee in OPC2, became the member and director of this OPC2. One of the friends of Ramesh advised him to do some charitable work for providing free education to the girl children of his native village nearby Jaipur. Ramesh thought about this proposal and asked his professional friend Sudhanshu to convert OPC2 into Section 8 company. Is this allowed? No, this is prohibited. This is not allowed. 1% company cannot be converted into Section 8 company. Alright, so this is the entire story. Now let's have a look at the questions one by one. The first question, since Rachna, being insane, lost the capacity to contract, Ramesh, who was nominee, became the member of OPC2. Now who will take nomination for this OPC? Understood the story? The question is that Rachna has become incapable. So Ramesh has become the member. Now the nominee who was the nominee has now become the member. So now there is no nominee. So who will the nominee be of OPC2 now? Nothing. Ramesh has become the new member, right? The new member will appoint a new nominee. That's all. Within 15 days, the new member will appoint a new nominee. So let's see. Ramesh, in the capacity of husband of Rachna, can nominate any person. No, just because he is husband of Rachna, for that reason, he cannot appoint a new nominee. Ramesh, who was nominee of OPC2, has now become member, correct? And now as a member of the OPC, he can nominate any person as per his choice as nominee for OPC. This option is right. Ramesh has become the member. Now he will appoint a nominee. Second question, whether conversion of OPC2 into Section 8 is permissible. This we know it's not permissible. No, OPC cannot be converted into Section 8 company. Then Ramesh is a member in OPC1. He is already a member in OPC1. And now after Rachna became insane, he became a member of OPC2 also. On 2nd April 2020, they are saying. So now on 2nd April 2020, he has become a member of 2 OPCs. So he will have to take corrective action. He will have to meet eligibility criteria within how much time? Within 180 days. So 2nd April 2020 plus 180 days. Right. So in April, you will have 28 days. 2nd April, she became insane. 2nd April only, he became a member in 2 OPCs. So from that day, you will calculate 180 days, right? So in April, you are left with 28 days, May 31 days, June 30 days, July 31 days, August 31 days. So total as of now will be 151 days. Yeah, 151 days. So total 180 days. So this is going to be September 29. So with September 29, 180 days will get expired. So on or before 29 September 2020, Ramesh will have to take corrective action. That is, he'll have to meet the eligibility criteria. That is, by 29 September 2020, he should decide that which OPC he wants to continue and which OPC he wants to leave. Alright. And then comes a last concept over here. After the demise of Sudha, the mother of Ramesh, Rachna was nominated by Ramesh as OPC1 as nominee. But now Rachna has become insane. So what recourse will you suggest to Ramesh? See, Rachna has become insane. Understand the whole situation over here. Ramesh is a member of OPC1. Sudha was a nominee. When Sudha died, Ramesh appointed Rachna as a nominee. Now Rachna has become insane. So of course Rachna can't continue as nominee. So now that's all simple. Ramesh will have to appoint a new nominee. Easy only. So Ramesh is required to nominate another person as nominee. Alright, when the nominee becomes incapable, a new nominee will of course be appointed. So that was it about this question. This was like a nice solid case study based MCQ covering quite a lot of concepts under your OPC discussion. Alright, so can we close this over here? Yes, now before I close this session, I just have 5 concept test questions for you relating to OPC, and with this I will be confident that you know now every little minute concept from OPC. Now anything they ask you from here, very easily you will be able to handle. So let's answer these 5 questions and then confidently we will close. Question number 1. Does a nominee have to be related to member by blood? Member and nominee, should they be family members? Is it mandatory? The answer is no. Remember I told you they can be friends also, not a problem. Then should the nominee and legal representative be the same? No, it is not necessary. The nominee and the legal representative may be different. Alright. Like for example, the member of the OPC, he can appoint in his will some other person as legal representative, but for the OPC he can appoint some other person as nominee. So they need not necessarily be the same. Then these 2 points, I just want to give you a revision of the number of days. For resident, the time limit was 120 days, and for the corrective action point, the time limit was 180 days, right? And lastly, OPC can carry on only those activities with profit motive. They cannot carry on activities with non-profit motive, right? Neither can the OPC be incorporated as a Section 8 company, nor can it be later converted into a Section 8 company. Alright, that's it guys. With this, every bit of the entire OPC discussion we've revised, we've seen all the questions, and now you're nice and ready with respect to OPC. I'll close this session over here. In our next session, we will be completing the remaining kinds of companies: holding subsidiary, then your listed unlisted companies, then your small companies, and I have one question for you from government companies as well. All of this we will see in our next session. Thank you. Bye-bye. Hello future chartered accountants. Let's begin our next session of our law workout batch. In the last session, we've already started learning the different kinds of companies. We are done with one-person companies in full depth, and now we'll start off with our discussion on private companies, one small concept, and then we'll take up a question. Okay. Now first of all, every private company, of course you know, in its name itself, we should put the words private limited. So if I start a private company with the name Level Up, my company's name would be Level Up Private Limited. So every private company will have the word private limited in its name. Then in a private company, minimum how many members? Minimum 2 and maximum 200 members. But there are 2 points which we have to be careful about this maximum limit. When we are counting the maximum number of members, when we are checking whether this 200 limit is fulfilled or not, we have to be careful about 2 things. Thing number 1, we will see the total number of members in this private company, okay? From this, we will subtract the ex-employee members, that is the past employee members. We will also subtract the present employee members, and we will see the balance number. This balance number has to be within 200, okay? So in simple words, the limit of 200 will not apply to past and present employee members, okay? And there's one more point about this calculation which you have to be careful. When you're counting how many number of members are there in the company, when you're checking whether the 200 limit is met or not, at that time, in case there are any joint shareholders, they will be counted as one only. Like for example, if A and B, 2 people are jointly holding shares of the company, you will not count them as 2 members, you will count them as 1 member only. Simple, okay? So in a private company, minimum number of members is 2 and maximum number of members is 200. But there are 2 points which you have to remember when you are checking this 200 limit. Number 1, when you are checking this 200 limit, you will exclude 2 categories. You will exclude past employee members, you will exclude present employee members. Balance has to be within 200. And one more special point I just discussed with you, in case there are joint shareholders, they will be counted as 1 only. Okay, now listen, in the articles of association of every private company, there are 3 special clauses. Number 1, we restrict what? We restrict the transferability of shares. See, you have to be little careful about the terminology, okay? We are restricting the transferability of shares. We are not prohibiting the transferability of shares, which means in a private company also shares are transferable. Just that they have to be, just that for example, if I am a shareholder of a private company and if I want to transfer my shares, I have to first offer those shares to the existing shareholders. Only if the existing shareholders are not willing to take those shares, only then I will transfer the shares to the outsiders, right? So even in a private company, shares are transferable, just that there is a restriction, and the restriction is that they must be first offered to existing shareholders. There is no prohibition, there is only a restriction, okay? Then the limit, I just now spoke to you about the limit of the number of members. Maximum we can have only 200 members. When you're counting this 200 members, you will not consider the past and present employee members, and joint shareholders you will be counting as 1 only. Then the third special clause in the AOA of a private company is that there's a prohibition. A private company is prohibited from issuing prospectus. A private company is prohibited from raising money from the public. Alright. See here, the reason why I brought this for you over here is these are some keywords you can't interchange. Like you can't use the word restrict for prospectus. You can't use the word prohibit for transferability. You can't interchange. Restrict transferability of shares, limit number of members to 200, prohibit prospectus. Again, restrict transferability of shares, limit the number of members to 200 and prohibit the issue of prospectus. Do not interchange these words. Okay, so these were two main discussions with respect to private companies. With this knowledge, and okay, one more point I left over here, number of directors. The minimum number of directors in a private company would be 2. Minimum 2 directors are required. Okay, so if you see in a 1-person company, see, let's do a comparative analysis. Okay, 1-person company, private company and public company. Alright, now first of all, the name of your 1-person company will have the words OPC Private Limited in the name. Private company will just have the word Private Limited in its name, and public company will have the words Limited in its name. Then the minimum number of members in a 1-person company would be 1, in a private company 2, in a public company 7. In a public company 7. Then the maximum number of members in a 1-person company, we can have 1 member only. So minimum 1, maximum 1. In private company, maximum 200. In public company, unlimited. There is no limit on the number of members. Then what is the minimum number of directors? In a 1-person company, minimum 1 director. We can have more than 1 also, but minimum 1. In a private company, minimum 2 directors. In a public company, minimum 3 directors. Okay, this is a small comparative analysis. I'm very sure you will be aware of all these basic points only, just giving you a reminder. Alright, now with this knowledge, have a look at this MCQ question. Alright, it's question number 5 in your MCQ handout. In Rupali Marketing Company Private Limited, 1000 shares are jointly held by Abir and Abhik. So 1000 shares are held by Abir and Abhik. So you will count them, the joint shareholders, no, you will count them as 1 person. I just told you joint shareholders will be counted as 1 person only. Abir and Abhik, 2 people, but you will count them as 1 person only. Then another 800 shares are jointly held by Seema and Srividya. So we have another 800 shares. These are also held by joint shareholders Seema and Srividya. 2 joint shareholders, but you will count them as 1 only. Then another 1200 shares are held by Ramesh, Raksha and Rajneesh. So we have another 1200 shares which are jointly held by 3 joint shareholders. So again you will count them as 1 only. Joint shareholders will be counted as 1 only. Further, 42,000 shares were held by 193 individual persons in their individual capacity. Is it possible for the company to induct more persons? See, the question says the company is Rupali Marketing Company Private Limited. So, which means it is a private company. Now, in a private company, maximum how many members can you have? Maximum we can have 200 members. The question doesn't talk about past employee members and present employee members. If the company had past or present employee members, I would have excluded them and balance only I would have restricted to 200. Here anyways no employee members and all, nothing the question is saying. So we are totally having how many members now? 3 over here plus 193. So 196 members we are having. The question is asking us, is it possible for the company to induct more persons? Yes, in a private company I can have maximum up to 200. We are having only 196 members. So we can induct 4 more members we can induct. So what would be your correct answer over here? Company is unable to induct more persons. This will be wrong. Company can induct 4 more persons as members. This would be your correct answer, option B. Understood? So basically in this MCQ, the only thing that they are testing us is that do we know that joint shareholders have to be counted as 1 only. Coming to the next question now relating to private companies. This is a descriptive question, a very recent mock test paper question also this is. Let's read the question. The question says Flora Fauna Limited, which means it's a public company, right? Flora Fauna Limited. It was registered as a public company with 230 members. It has 230 members. So directors and their relatives 50, employees 15, ex-employees 10, 5 couples holding shares jointly 10, others 145. So total put together this company is having 230 members. Board of directors of the company proposes to convert it into a private company. Advise whether a reduction in the number of members is necessary or not. Understand the question correctly. Right now it is a public company and this public company has to be converted into a private company. This public company is having 230 members and they are asking that if this public public company has to be converted into a private company, is there a requirement to reduce the number of members or not? Now see, in a public company there is no limit. We can have any number of members. But in a private company there is a limit, guys. We can have maximum only 200 members. But I also taught you that in this 200 members calculation, we have to remember two things. Number one, we will see the total number of members in the company. Total number of members in the company. From that we will reduce the ex-employee members, that is the past employee members. We will also reduce the present employee members, and we will see the balance. This balance number, this only has to be less than or equal to 200. Right guys? Here if you see totally how many members are there in the company, 230. I will actually not consider it at 230. I'll tell you why. See, directors and the relatives, okay, 15. Employees 15, ex-employees 10, fine. But look at this, okay, 5 couples holding shares jointly in the name of husband and wife. So there are joint shareholders. Now joint shareholders, I told you, we will count them as one only. So if there are 5 couples holding shares in the name of husband and wife, will you consider both the husband and the wife? Will you count them as 10 people? No. Those 5 couples will be counted as 5 members only. Right, because each couple is a joint shareholder. So each couple you will not count as 2 members. Each couple you will count as 1 member only. Alright. So totally how many members are there now? Totally the company is having 225 members now. Right, from this 230, if I change this 10 to 5, totally the company is having 225 members. From this I will ignore the past and the present employee members. We have past employee members 10. We have present employee members 15. So now how many are we left with? Exactly 200 members. We are left with exactly 200 members. So and if the public company is getting converted into a private company, and if the company is having exactly 200 members, yes, conversion is possible. Is there any requirement to reduce the number of members? No, there is no requirement to reduce the number of members. Understood? So in this question, 2 things are being tested. Thing number 1, the joint shareholders, did we remember to count them as 1 only? The 5 couples will be counted as 5 members only. Then the second point that is being tested over here is, do we know that past and present employee members have to be ignored while checking the 200 limit? So here if I ignore these 2 members, then we are left with 200 members only. And yes, a private company can have up to 200 members. So therefore this conversion is easily possible, and for this conversion no reduction is required. Alright guys, so this was a very simple discussion relating to private companies. Now let's focus on our next discussion, which is going to be about holding and subsidiary companies. Now from here, nice questions are being asked in the examination, okay? So I'll quickly give you a revision first of all the concepts that are involved over here, and then I'll take you to the questions. A very good number of questions we will be seeing under this topic. So listen to the concepts first. Now the very first discussion is, how is a holding subsidiary relationship created? You know very well that there are totally 3 methods in which a holding subsidiary relationship is created. In the first method, one company controls the composition of board of directors. Controlling the composition of board of directors means one company is able to appoint or remove the majority of directors of another company. Like for example, if I have 2 companies, A Limited and B Limited, if A Limited is able to appoint majority of directors in B Limited, or if A Limited is able to remove majority of directors of B Limited, if that kind of power A Limited has, then we will say that A Limited is controlling the composition of board of directors of B Limited. And if A Limited is controlling the composition of board of directors of B Limited, then A Limited will become the holding company and B Limited will become the subsidiary company. That's the first method. Then in the second method, one company is controlling more than half means more than 50%, not at least 50%, more than 50% of the total voting power of the subsidiary company, either on its own or together with subsidiaries. This is the most important point in this entire discussion. So over here what's happening is, one company, let's say A Limited, is controlling more than half of the total voting power of B Limited. See, I'm not saying more than half of equity shares. Be careful about the language. The reason why this word is being used in one of the upcoming questions, you will properly understand. For now, remember the terminology. We are not saying that A Limited is controlling more than half of equity shares. That's not the language. The language over here is total voting power. So one company is controlling more than half of the total voting power of another company. So in our example here, if A Limited is holding more than half of the total voting power of B Limited, either on its own itself or through its subsidiaries, then in that case again A Limited will become the holding company and B Limited will become the subsidiary company. So in the second part, we have to remember that either this control of more than 50% can be by A Limited on its own. Either it can be on its own or it can be together with its subsidiary. A Limited along with its subsidiaries put together owning more than 50% shares in B Limited, again holding subsidiary relationship will be formed. But however, in this discussion, see whatever I just told you, all this is CA foundation syllabus also. Very nicely you will be knowing all this. But in relation to this, okay, two very important points you need to remember. One, the first important point is that I am using the word total voting power over here. I am not using the word paid up share capital. I am not using the word equity shares. The terminology which I am using is total voting power. This terminology can't change in your answer also. Another important point which you should be very careful about with respect to this discussion is that when you are checking, right, that A Limited is holding how many shares in B Limited, when you are checking whether holding subsidiary relationship is there or not, you will not consider those shares which A Limited is holding in fiduciary capacity. In simple words, shares which are held in fiduciary, I'll explain it to you, listen to me. Shares which are held in fiduciary capacity, you will not consider that when you are checking whether holding subsidiary relationship is there or not. Now with respect to this point, you got to be a little patient because a little later, once again this will anyways be discussed by me with you. In this session only, towards the end of holding subsidiary company, once again I will be discussing this with you in the form of a concept test. Okay, so be a little patient, try to understand a little bit now. Little bit you will understand now, but perfect understanding you will get only towards the end of this concept. Okay, see, when you are checking whether A Limited is holding more than 50% of total voting power in B Limited or not, when you are checking whether holding subsidiary relationship is there or not, at that time whatever shares are held in fiduciary capacity, that is whatever shares are held in the capacity of trustee, if A Limited is holding for example 1000 shares in B Limited, okay, and A Limited is holding another 100 shares in B Limited, total A Limited is holding 1100 shares in B Limited. Out of this 1100 shares, 100 shares it is holding as a trustee. This you will not consider. When you are checking whether there is a holding subsidiary relationship or not, whatever shares are being held in the capacity of a trustee, you will ignore that and you will consider only the balance number of shares to judge whether there is a holding subsidiary relationship or not. Okay, so this is the second method in which holding subsidiary relationships are created. Now coming to the third method which is called as deemed subsidiary. Let's say there is a company A Limited which is a holding company of B Limited. A Limited is a holding company, B Limited is a subsidiary company. Now there is another company C Limited and B Limited is a holding company of C Limited. Now our discussion is about A Limited and C Limited. If you see, A Limited is not directly controlling C Limited, right? A Limited does not have any direct relation with C Limited. There are two types of control we spoke about, right? Either controlling the composition of the board of directors or controlling more than half of the total voting power. In the deemed subsidiary concept, control is of another subsidiary. The control is of B Limited. B Limited is having control over C Limited. So therefore B Limited is a holding company and C Limited is a subsidiary company. Now this subsidiary company C Limited will not only be the subsidiary of B Limited, it will also automatically become the subsidiary of A Limited. This is called as the deemed subsidiary concept. This C Limited is deemed to be the subsidiary of A Limited also. You understood? There is no direct relation between A Limited and C Limited. The control is of a subsidiary. Control over C Limited. A Limited does not have any control over C Limited. It is B Limited that has control over C Limited. But still, because it is a subsidiary, Understanding now? C Limited is a subsidiary. Because it is a subsidiary, it will also become the holding company subsidiary. subsidiary. So there are three methods in which a holding subsidiary relationship can be created. I'll summarize it for you. First is through controlling the composition of board of directors. Second is controlling more than half of the total voting power either on its own or through subsidiaries. And the third point is if this control, either board of directors control or total voting power control, either of these two controls, directly A Limited is not having in C Limited, but A Limited subsidiary is having control over C Limited, then that C Limited will not only be the subsidiary of B Limited, it will also become the subsidiary of A Limited. So subsidiary's subsidiary will also become the holding company's subsidiary. Okay, so these are the three methods in which a holding subsidiary relationship is created. Now comes the next concept. Can a subsidiary company also hold shares in holding company? Now this is covered by section 19, a very simple section. I'll quickly give you a revision of this. You know the answer very well. Can a subsidiary company hold shares in holding company? The answer is of course no, not possible. But even though students know this concept, they just write that no subsidiary company cannot hold shares in holding company, but they don't get marks because here there are two very important keywords and both the keywords have to be in your answer paper, only then will you get the marks. The two keywords are number one, allotment. Allotment or transfer of holding company's shares to subsidiary company is void. So you should be writing two statements under section 19. Statement number one, no, a subsidiary company cannot hold shares in holding company. Statement number two, allotment or transfer of holding company's shares to subsidiary company will be void. Alright, this is extremely important. So even though a subsidiary company cannot hold shares in holding company, still there are three exceptional cases where a subsidiary company can hold shares in the holding company. Come on, quickly give me answers. Let's see how nicely you know this concept. What are the three situations where a subsidiary can hold shares in the holding company? Situation number one, when the subsidiary company holds shares in the holding company as a trustee. Allowed. If the subsidiary company is holding shares in the holding company in the capacity of a legal representative, allowed. And even before the holding subsidiary relationship was created, even before that, if subsidiary company was holding any shares in the holding company, subsidiary company can continue to hold those shares even, that is allowed. Alright, now out of these three exceptions, remember the three exceptions, I'll give you a revision once again. One is trustee. As a trustee, subsidiary company can hold shares in holding company as a trustee. Then subsidiary company can hold shares in the holding company as a legal representative. And if subsidiary company was holding shares in the holding company even before the holding subsidiary relationship was formed, before that itself, subsidiary company is holding shares in holding company, those shares they can continue to keep. Okay, but in these 3 points, there's one more last point which you should remember, which is if the subsidiary company is holding shares in the holding company as a trustee or as a legal representative, then subsidiary company will get voting rights also in holding company. But with respect to the shares which were held by subsidiary company in the holding company even before the holding subsidiary relationship was created, with respect to those shares, subsidiary company cannot enjoy any voting rights. Alright, good revision has happened. I am hoping this is your main discussion with respect to holding and subsidiary companies, guys. Your questions will revolve around these concepts only. Okay, I'll show you so many examination questions, RTP and MTP questions. Now everything will revolve around this discussion only. And yes, I know that one point is still pending. The pending point is this fiduciary capacity here and this trustee over here. I will interlink these two in the form of a concept test towards the end of this holding subsidiary relationship, and you will get proper understanding. Okay, these 2 points, you might be a little confused right now. You might be thinking that ma'am, here you are saying trustee is allowed, here you are saying trustee we will not consider. There is a contradiction you will feel. There is actually no contradiction. I'll show you just a little later. Alright, 3 situations where subsidiary can hold in holding company. Number 1 as a trustee, number 2 as a legal representative, and number 2 shares which it was holding even before the relationship was formed. Those shares it can continue to hold, but for those shares subsidiary company will not be able to enjoy any voting right in the holding company. Alright, now with all this knowledge in our mind, let's take up the questions one by one. 1, 2, 3, 4. 4 questions we have, 4 descriptive questions we have. Let's discuss them. Look at this first question over here, 7th question in your question handout. Alright, The question says, as at 31st March 2018, the paid up share capital of S Limited is 1 crore rupees divided in 10 lakh equity shares of 10 rupees each. So there is this company S Limited, it is having totally 10 lakh equity shares. Out of this, H Limited is holding 6 lakh equity shares and 4 lakh equity shares are held by others. So out of this 10 lakh equity shares, 6 lakh equity shares are held by H Limited and 4 lakh equity shares are held by others. So very clearly H Limited is holding more than 50% of the total voting power, guys. So clearly S Limited becomes the subsidiary company and H Limited becomes a holding company over here. Then the question says, simultaneously S Limited, the subsidiary company, is holding 5% equity shares of H Limited, out of which 1% shares are held as legal representative of a deceased member of H Limited. Understood? S Limited is a subsidiary company, H Limited is a holding company. Okay, and the subsidiary company is holding 5% equity shares of H Limited. Is this allowed? Generally not allowed. Generally, subsidiary company cannot hold shares in holding company. Generally, allotment and transfer of holding company's shares to subsidiary company is void. But there are 3 exceptions, guys. Shares, if subsidiary company, the shares which subsidiary company is holding in the holding company as a legal representative, this is going to be allowed. So subsidiary company is holding 5% shares of holding company, out of which 1% is held as legal representative. This will definitely be allowed. What about the balance 4%? We don't know as of now. So we'll see. We'll go ahead and we'll see what the question says. As of now, subsidiary company is holding company's 1% shares as a legal representative, which is allowed. For these shares, for this 1% shares, will you give subsidiary company voting right also? Yes, even voting right will be allowed, right? As legal representative and as trustee, whatever shares are being held, on that voting right is allowed. Okay, keep this in mind and now come to the 3 questions over here. Can S Limited make further investment in equity shares of H Limited? The answer will be no. You know very well, subsidiary company cannot hold shares in holding company. So can they buy more shares of holding company? No, it is prohibited. Allotment and transfer of holding company's shares to subsidiary companies is void. Then can S Limited exercise the voting rights at AGM of H Limited? See, S Limited is holding 5% equity shares. For this 1% which is being held as a legal representative, we've already concluded that yes, voting right can be enjoyed. So for that 1%, yes, voting right can be enjoyed. Then can H Limited allot or transfer some of its shares to S Limited? We learnt that no, this is not allowed. This is going to be void. Once holding subsidiary relationship is created, the holding company cannot allot or transfer its shares to the subsidiary company. Prohibited. Section 19, it is void. Alright, this was your first question, testing entirely on your knowledge on section 19. Alright, now come to the second question over here, question number 8. The question says S Limited acquired 10% paid up share capital of H Limited on 15th March 2017. So S Limited is holding 10% shares of H Limited, and when did this happen? On 15th of March 2017. Then the question says H Limited acquired 55% paid up share capital of S Limited on 10th March 2018. So there are 2 transactions here. First, S Limited purchased 10% shares of H Limited. Then H Limited purchased 55% shares of S Limited, which means H Limited has purchased more than 50% of the total voting power of S Limited, which means H Limited has now become the holding company and S Limited has become the subsidiary company. Now, when did this holding subsidiary relationship get created? On the 10th of March 2018. Now, the question, very obviously, tell me, the question will be, what about these shares? Can S Limited continue to own these shares? What do you think? See, generally subsidiary company cannot own shares in the holding company, right? But these shares subsidiary company bought in the holding company even before the holding subsidiary relationship was formed. So these shares, can they continue to own? Yes. Section 19 again, guys. But on these shares, will subsidiary company get voting right? No voting right. Right guys, see, subsidiary company can hold shares in the holding company as a legal representative, as a trustee. In those two cases, voting right also they will enjoy. But for the shares which were held even before the holding subsidiary relationship was formed, these shares, yes, they can continue to own, but no voting right. Okay, now come to the remaining question. Then the question says, so totally 2 transactions we have spoken about. Then one more transaction happened. Hedge Limited on 25th September 2020. So on 25th September 2020, Hedge Limited issued bonus shares to the existing shareholders. Now again a problem will arise. What problem? Hedge Limited is giving bonus shares to its shareholders, and don't you think one of the shareholders of Hedge Limited will be S Limited also? S Limited is owning 10% shares in Hedge Limited, no? So when Hedge Limited is giving bonus shares will go to S Limited also. Will that be allowed? Even that question arises. Now wait, look at the question now. Bonus shares were allotted to S Limited. Examine under the provisions of Companies Act. 2 things they are asking us. Validity of the holding of shares by S Limited in H Limited. Is this 10% which S Limited is holding in H Limited, is it valid? Yes, it is valid. How come? It's valid because this holding was even before the holding subsidiary relationship was formed. Yes, S Limited can continue to hold these shares, but no voting right. Okay, then they're asking us, this is the main reason why I'm discussing this question with you. Allotment of bonus shares by H Limited to S Limited. Will this be allowed or not? Now listen to me. Holding subsidiary relationship was created on 10th March 2018. What did we learn? After holding subsidiary relationship is created, any allotment or transfer of holding company's shares to a subsidiary company will be void, guys. So even over here, H Limited is allotting shares to subsidiary company. So will your answer be void? Generally, yes, your answer will be void. But in this case, you can't say it is void because these bonus shares, are they independent shares, guys? No. See, these bonus shares are related to the already existing holding, right? These bonus shares are related. Why is H Limited giving bonus shares to S Limited? H Limited is giving bonus shares to all shareholders. And one of the shareholders is S Limited. So those bonus shares H Limited can give to S Limited. See, apart from this, any other shares if H Limited is going to allot to S Limited after holding subsidiary relationship is formed, that will be void. But these bonus shares are relating to already existing shares, no? Therefore, this is also going to be valid. So even these bonus shares are relating to the existing holdings which were existing even before the holding subsidiary relationship was formed. These bonus shares are related to this 10%, and therefore this bonus share can be allotted. It is going to be allowed. Alright, so this was your question number 8, a very important question with respect to the second subdivision, that yes, no doubt, after holding subsidiary relationship is created, allotment and transfer of holding company's shares to subsidiary company is void, no doubt. But bonus shares are relating to the already existing shares, therefore it's going to be allowed. Alright, so this was your question number 8. Now coming to question number 10, a very important question, guys. November 2023, 5 marks question this was. Listen to me very carefully, you will enjoy this question. The question says, number 1, there is this company ABC Limited. I've drawn some charts for you. It will help you understand the question better. So we have this company ABC Limited. It issued equity shares worth 1 lakh rupees, that is 10,000 shares of 10 rupees each on 1st April 2023, fully subscribed. So ABC Limited totally 10,000 shares. Out of this 10,000 shares, XYZ Limited is holding 3,500 equity shares, 3,500 XYZ. PQR is holding 2,500 shares. Okay, this is it about ABC. Total 10,000 shares. Out of 10,000, 3,500 is held by XYZ. 2,500 is held by PQR. Then the question says, prior to the issue of equity shares, ABC Limited is already holding 20% of equity shares of MNP Limited. So there's one more company, MNP Limited. In MNP Limited, 20% shares are being held by ABC prior to the issue of equity shares. Okay. Then XYZ Limited holds 10% of MNP's equity shares as a trustee. Till here we've read the question. The MNP company, MNP Limited, in MNP Limited 20% shares are held by ABC, old transaction this is, and 10% shares are held by XYZ as a trustee. Okay, then the question says MNP controls the composition of board of directors of XYZ Limited and PQR Limited. MNP is controlling the composition of board of directors. First control this is, right? So MNP will become the holding company and XYZ and PQR will become the subsidiary company. Understanding? Nice interesting question this is. In ABC, 3,500 shares held by XYZ, 2,500 held by PQR. In MNP, 20% shares held by ABC, 10% shares held by XYZ. MNP is a holding company of XYZ and PQR. Now the question is asking us, examine with reference to the relevant provisions of Companies Act whether ABC Limited is a subsidiary of MNP Limited. Whether ABC Limited is a subsidiary of MNP Limited, they're asking us about the relationship between ABC and MNP. Now I'll tell you what concept will apply over here. See, in ABC, is MNP directly holding shares? No. In ABC, however, XYZ and PQR are holding shares. XYZ and PQR are subsidiaries of the holding company, subsidiaries of MNP. So in ABC, MNP is not holding any shares, but MNP's subsidiaries put together are holding 3,500 plus 2,500, 6,000 shares, which means 6,000 out of 10,000, 60% shares. So here if you see 60%, which is more than half, more than 50% of total voting power. Tell me, is MNP directly having this more than 50% total voting power in ABC? No. This control is not directly of MNP, but this control of more than 50% is of the subsidiaries. So XYZ and PQR put together are having more than 50% of total voting power. So here control of more than 50% of total voting power is of the subsidiaries. So which concept comes to your mind now? The deemed subsidiary concept will come to your mind. You remember I told you that A Limited is a holding company of B Limited, B Limited is a holding company of C Limited. In this case, A Limited is not directly having control over C Limited. Instead, the control is of a subsidiary. Subsidiary is controlling C Limited. So C Limited will be subsidiary of not only B Limited, also will be subsidiary of A Limited. Something similar is applicable here also. Even in this case over here, if you see A, B, C, MNP. MNP is not directly controlling ABC, no. But however, XYZ and PQ are the subsidiaries. They are the subsidiaries of MNP, right? These subsidiaries together are having control over ABC. So the control is not of MNP directly. The control is of the subsidiaries. So ABC will automatically become the subsidiary of MNP. So whether ABC Limited is a subsidiary of MNP Limited, the answer is yes, deemed subsidiary. ABC will be a deemed subsidiary. Why deemed subsidiary? Because ABC is not having, MNP is not directly having control over ABC. The control is of its subsidiaries. So it becomes a deemed subsidiary. Okay. Then comes the next question, whether ABC Limited and XYZ Limited have the right to vote in the AGM of MNP Limited. See, MNP is the holding company of both ABC also, XYZ also. We concluded that by now. Now, in MNP, both the subsidiaries are holding shares. ABC is holding shares prior to the holding subsidiary relationship got formed. So, can ABC continue to hold these shares? Yes. But will they get voting rights? No. Same thing, guys. Same section 19 application. What about XYZ? XYZ is also a subsidiary of MNP. XYZ is holding 10% shares in MNP as a trustee. Can XYZ continue to hold these shares? Yes. And will XYZ get voting right also in MNP? The answer is yes. If the subsidiary company is holding shares in the holding company as a trustee or as a legal representative, then yes, voting rights they can enjoy. Okay. Only shares which are held prior to the holding subsidiary relationship, only for those shares voting right cannot be enjoyed. Alright. So this was question number 10. Another good question, especially testing our understanding of the deemed subsidiary concept. Alright. Let's come to question number 11 now. One last question in our holding subsidiary discussion. This is a recent mock test paper question, May 2024 mock test paper question. I'll discuss this with you. See, the question says there is this company Cross Limited. It is a company incorporated under the Companies Act 1956. By the way, will the Companies Act 2013 apply even to those companies which were incorporated under the 1956 Act? Will the Companies Act 2013 also apply to those companies which were incorporated under the 1913 Companies Act? The answer is yes. We have this concept of applicability of Companies Act, right? I'll give you a quick revision of that. The concept says that the Companies Act 2013 will also apply to those companies which were incorporated under any previous Companies Act. The Companies Act 2013 will also apply to insurance companies. It will also apply to electricity companies. It will also apply to statutory companies. It will also apply to banking companies. Of course, it will apply to companies which are incorporated under this act, and it will also apply to other body corporates. Alright, so point, just an interconnected point, will Companies Act 2013 also apply to companies incorporated under the 1956 Act and other old Companies Act? The answer is yes. Coming back to the question, so we have this company Cross Limited and we have another company XYZ Private Limited. Now the question says that this company XYZ Private Limited has issued 1 lakh convertible preference shares carrying voting right of 100 rupees each and 10 lakh equity shares of 10 rupees each fully paid up. You remember when I was discussing with you about the holding subsidiary company concept, we had seen this term total voting power, and I was telling you again and again it's more than 50% of total voting power, not more than 50% of equity shares. It's going to make a big difference. I had told you that we will be seeing this in another question. This question only, guys, will help you understand the real meaning of this total voting power. So listen very, very carefully. This one point over here, that the preference shares carry voting right, this changes the whole course of this question. So the question says that this company XYZ Private Limited, this company is having two kinds of shares. It has preference shares which are convertible and also carry voting right, and it also has equity shares. Okay, now see the denominations, the face values are different, right? Preference shares face value is 100 rupees, equity shares face value is 10 rupees. So therefore it will become a little confusing. So what I'll do is, to eliminate the confusion, I'll convert, instead of talking in number of shares, let's talk in amount, in value. Okay, so convertible preference shares, we have 1 lakh preference shares of 100 rupees each, which means total 100 lakh rupees of preference shares, and the company has 10 lakh equity shares of 10 rupees each. So again total 100 lakh rupees of equity shares. So the total capital which carries voting right in the company is 200 lakh rupees. You understood why I am talking in rupees, right? Because it's different denominations. Then the question says that there's this company Cross Limited. It is holding, so we have this company Cross Limited. It is holding all the preference shares and 1 lakh equity shares of XYZ Private Limited. So out of this 200 lakhs, okay, out of this 200 lakh rupees of capital in XYZ Private Limited, this company Cross Limited is holding preference shares, entire preference shares. So entire 100 lakh rupees of preference share capital it is holding, and it is holding 1 lakh equity shares. So equity shares 1 lakh of 10 rupees each, so 10 lakh rupees worth equity shares. So total 110 lakh rupees worth capital. This itself is very clear that Cross Limited will now become the holding company and XYZ Private Limited will become the subsidiary company because of this 200 lakh. Okay, what is 50%? 50% will be 100 lakh. So more than 100 lakh, more than 50% of the total voting power is being held by Cross Limited. Now did you understand? We are not considering only the equity capital, we are considering the total voting power. See, if preference shares were not carrying voting rights, I would not even have considered this. I would have only considered equity share capital. But because here the question says that the preference shares carry voting right, I will consider the preference shares also. So we're supposed to see not just equity share capital, we're supposed to see the total voting power. In this company, capital which carries voting right is 200 lakh rupees. So out of this 200 lakh rupees, Cross Limited is holding 110 lakh, which is more than 50%. Therefore, Cross Limited becomes a holding company and XYZ Private Limited becomes a subsidiary company. Okay, now listen to me. One another observation, interesting question, guys. One another observation I'll show you over here. Now, this company, Cross Limited, it is a public company. I'll scroll up a little. Yeah. So Cross Limited is a public company. This is the holding company, right? And XYZ Private Limited, this is a private company and this is a subsidiary company. Now, any concept is coming to your mind. We haven't discussed it in our session, but you must be knowing about this concept, the deemed public company concept, guys. So when a public company is holding company of another private company, then this private company will become deemed public company, right? I'll repeat again. If a subsidiary company, if a private company is a subsidiary of a public company, even though it is a private company, you will treat it as if it is a public company. So XYZ Private Limited, even though actually it is a private limited, even though it's actually a private company, we will treat it as if it is a public company because it is a subsidiary of a public company. Now come to the question. The provisions of Companies Act 2013 are applicable to Cross Limited? Yes, we already discussed about the applicability of Companies Act. Companies Act 2013 will also apply to those companies which were incorporated under any of the earlier Companies Acts. Then the question is asking us, XYZ Private Limited, is a public company as per Companies Act 2013? We will say yes, it is a deemed public company. Why is it a deemed public company? Because it's a private company and it is a subsidiary of Cross Limited. It is a subsidiary of public company. How come it became a subsidiary? Because more than 50% of its total voting power is with Cross Limited. So XYZ Private Limited is a private company which is a subsidiary of a public company, and therefore even though it is a private company, it will become a deemed public company. Alright, nice interesting question, guys. This is a kind of a question which I would mark and keep to see the day before the examination. Alright, so with this we are done with all our questions relating to holding in subsidiary company, and now I'll go to that one last thing which I had told you will get perfect clarity towards the end, this fiduciary capacity concept. Okay, I'll discuss it with you in the form of 2 concept test questions. Perfectly you will understand. Listen to me now. There's this company A Limited. A Limited is having totally 100 shares outstanding. Out of these 100 shares, 50 shares are held by B Limited. Another 10 shares are also held by B Limited but as a trustee, which means in fiduciary capacity, and 40 shares are being held by others. My question to you is B Limited holding company of A Limited? See, in A Limited, B Limited is holding how many shares? 50. Will you say 50 or will you say 50 plus 10, 60? When you are checking whether holding subsidiary relationship is there or not, you will not consider the shares which are held in fiduciary capacity. You will consider only the other shares, 50. So, A Limited, total 100 shares, 50% of the total voting power will be 50 shares over here. Is B Limited holding more than 50 shares? No. B Limited is holding exactly 50 shares. Is it more than 50 shares? Is it more than 50% of total voting power? No. So, is B Limited a holding company of A Limited? The answer is no. You understood? So what I'm trying to show you over here is when I'm checking whether holding subsidiary relationship is there or not, in that checking, I will not consider the shares which are held as a trustee. I will not consider the shares which are held in fiduciary capacity. Okay. Now comes my second question over here. There is this company X Limited which is holding company and Y Limited which is subsidiary company. Okay. So X Limited is a holding company of Y Limited. Now in X Limited, in the holding company, one shareholder was there. That shareholder donated his shares to a trust. Understanding? In X Limited, imagine there was one shareholder, one Mr. Pink. He was a shareholder in X Limited, the holding company. He was holding 10% shares of X Limited. He donated those 10% shares that he was holding, he donated to a trust. Now for a trust, he has to appoint a trustee. Whom did he appoint as trustee? The subsidiary company Y Limited was appointed as trustee. Now Y Limited, now see, listen, Y Limited, which is a subsidiary of X Limited, will now end up holding these 10% shares of X Limited as a trustee. This question, this concept over here, which section will apply? section 19. Right guys, if you see over here, once again listen to me. X Limited is a holding company. Y Limited is a subsidiary company. In X Limited there was a shareholder. In holding company there was a shareholder. He was holding 10% shares of the holding company. He donated those shares to a trust. Now for that trust, the same subsidiary company Y Limited was appointed as a trustee. So now Y Limited, the trustee, will end up holding 10% shares of X Limited. Is this allowed? Generally, the subsidiary company cannot hold shares of holding company. Generally, allotment and transfer of holding company's shares to subsidiary company is void. But under section 19, 3 exceptions, trustee is also included over here. Is it allowed? Yes, it is allowed. So the reason why I brought these two concept tests here are to show you that in your holding subsidiary discussion, there are two places where we talk about the trustee concept. Okay, one is when we check whether there is holding subsidiary relationship or not. When you are checking that, in that checking you will not consider the shares which are held as a trustee. Then if subsidiary company is holding shares, if subsidiary company is holding shares in holding company as a trustee, that's going to be allowed, and on those shares the subsidiary company can exercise voting right also. Now no confusion, now both the concepts nicely you have all understood. Okay, so with this very confidently I think we can close our holding subsidiary company discussion. I am not sure about you, but I have total confidence now that whatever question they ask you from OPC, private companies, holding subsidiary, nicely you can handle. Come on now, let's go to the next discussion. Our next discussion is going to be about associate companies. Small simple discussion only. An associate company is a company in which another company has significant influence. Significant influence means what? Significant influence means the other company is controlling at least 20% of total voting power or participation in business decisions. Listen to me. Let's say there are two companies, X Limited and Y Limited. Okay, now X Limited is holding at least 20% of the total voting power of Y Limited. See, even over here I am using the word total voting power. I am not saying paid up share capital. I am saying total voting power. You know the significance of this word now. Even over here, same thing I will say. When I am checking whether this company is associate or not, I will not consider the shares which are held in fiduciary capacity. Same point we had in holding subsidiary also, no, that whatever shares are being held in fiduciary capacity, you will not consider that. Same thing even over here, when you are checking whether one company is an associate of the other company or not, you will not consider the shares which are held in fiduciary capacity. Okay, so let's say this is company X Limited. This company X Limited is holding at least 20% total voting power of Y Limited. Okay, at least 20% of Y Limited's voting power is with X Limited. So when this happens, Y Limited becomes the associate company of X Limited. It should be at least 20% of total voting power, but it should be less than or equal to 50. Why less than or equal to 50? Because if it is more than 50, then instead of associate company, subsidiary company concept will apply. No. So that is why associate company means it should be at least 20% but up to 50%. Because if it is more than 50%, then it will become holding subsidiary relationship. Okay, so associate company means in associate company, whenever you're writing the answer, your key word will be significant influence. Associate company means a company in which another company is having significant influence, and significant influence means what? Significant influence means at least 20%, at least 20% of the total voting power. So in my example over here, X Limited is having at least 20% total voting power of Y Limited. So X Limited is having significant influence over Y Limited. So Y Limited, the company, this company will be called as the associate company. Remember the at least 20% number. Okay, now look at this question, small simple MCQ question. Associate company in relation to another company means a company in which that other company has significant influence. Key word guys, and significant influence means what? At least 20% of the total voting power. And here also remember, when you're calculating, when you're checking whether a company is an associate company or not, do not consider the shares which are being held in fiduciary capacity. Okay, this was your small associate company discussion. Now comes another very important discussion, guys. Listed and unlisted companies. Listen to me very carefully. See, this was not a very important concept earlier, okay? But there was an amendment some 2-3 years back, because of which this part was inserted in this concept. And since then, this has become a very important concept from the exam point of view. So listen to me carefully. Listed, unlisted companies. Let's talk about listed companies. Now, listed companies are those companies whose securities are listed in a recognized stock exchange or shares are listed in a recognized stock exchange. Which of the two is correct? Listed company is a company whose securities are listed, not shares. We will not say just shares, because see, listed, even if shares are not listed, if debentures are listed, even then it will become a listed company. No. So listed company means a company whose securities are listed. Securities should be listed where? Stock exchange or recognized stock exchange. Be careful, guys, these little things, these are those minute details which differentiate a rank holder's paper from any other paper. So these are the things which I want you to put in your answer paper. That's how your answer paper will stand out. So a listed company is a company whose securities are listed in a recognized stock exchange, not shares. You will say securities. Securities are listed where? Not stock exchange. You will say recognized stock exchange. Okay. So unlisted company is what? Unlisted company will be ulta, whose securities are not listed in a recognized stock exchange. Right, guys? But in addition to this, there are 5 other companies. These 5 companies, even though they have listed something, they are still considered as unlisted companies. This list is given in the Companies Act in consultation with SEBI. So very important. Even though in these 5 situations, some listing is there, but still it will be considered as unlisted. What are the 5 situations? Listen to me. In the first situation, we have a public company. This public company has not listed equity shares in recognized stock exchange, but it has listed non-convertible debentures issued on private placement basis. Again, it's a public company. It has not listed equity shares in a recognized stock exchange, but it has listed non-convertible debentures which it had issued on private placement basis. So, even though it has listed something, see, it has listed non-convertible debentures, even though it has listed something, it will still be considered as an unlisted company. Second situation, again, public company which has not listed equity shares in recognized stock exchange but has listed non-convertible preference shares issued on a private placement basis. Even over here, see, in my first situation, non-convertible debentures were listed in the stock exchange. In the second situation, non-convertible preference shares are listed in the recognized stock exchange. Something is being listed, but still it will not be considered as it will be considered as an unlisted company. Even though something is listed, it will still be considered as an unlisted company. Third situation, again it is a public company. It has not listed equity shares. This time it has listed both. It has listed non-convertible debentures also, non-convertible preference shares also issued on a private placement basis. So again, same thing I'll tell you, even though something is listed over here, still it will be considered as an unlisted company. Okay, so first 3 points understood. First 3 points, public company, not listed equity shares. It has either listed non-convertible debentures or non-convertible preference shares or both issued on private placement basis. Now comes the fourth situation. In the fourth situation, your company is a public company. Okay, this again public company. This public company has not listed equity shares in recognized stock exchange, but it has listed equity shares in a section 23(3) stock exchange, which means it has listed its equity shares in a foreign stock exchange. Like for example, Make My Trip. Make My Trip has not listed its equity shares in BSE or NSE. It has not listed equity shares in recognized stock exchange, but its equity shares are listed in US stock exchange. In NASDAQ, its equity shares are being listed. So this will come under this category, wherein this is a public company. It has not listed equity shares in India recognized stock exchange, but it has listed equity shares in a foreign stock exchange. Even though something it has listed, still it will be considered as an unlisted company only. Understood this? Yes, fourth point important guys, section 23(3) stock exchange is nothing but a stock exchange which is in a foreign jurisdiction. That is a stock exchange in a foreign country. So a public company which has not listed equity shares in recognized stock exchange but has listed its equity shares in some foreign stock exchange will be considered as an unlisted company. And lastly, we have a private company. This private company, again same thing, it has not listed equity shares in recognized stock exchange but it has listed non-convertible debentures which were issued on a private placement basis. So first 3 points public company, fourth point also public company, fifth point private company, it has listed non-convertible debentures on a private placement basis. You might wonder, ma'am, how private companies are listing? Generally not allowed to list. Yes, not allowed to list, no doubt, but under SEBI rules, in some exceptional cases, fulfilling some conditions, even private companies can list non-convertible debentures alone. So if they have listed non-convertible debentures, even though something is listed, these companies will not be considered as listed, they will be considered as unlisted companies. Okay guys, so this was your listed unlisted company discussion. Quick revision has happened. Now let's come to the question. Very important question guys. We have this question was asked in the November 2022 examination for 5 marks. 3 subdivisions only are there. Each of the 3 subdivisions independently one by one let us take. We just have to say whether it's a listed company or unlisted company. Okay, come on. Slowly, carefully. First question. ABC Limited. By looking at the name itself, you can say it is a public company. Yes, it has listed non-convertible debentures issued on a private placement basis. Will you consider it as listed or unlisted? See, it's a public company. It's a public company. It has not listed its equity shares in a recognized stock exchange, but it has listed non-convertible debentures which were issued on a private placement basis. Even though something is listed, we will still consider this as unlisted company guys. Just now we've learnt this situation number 1. It's a public company. It has not listed equity shares, but it has listed non-convertible debentures which were issued on a private placement basis. Even though something it has listed, we will consider it as if it is unlisted. Then comes a second subdivision, CHG Limited. Again, by looking at the name itself, you can say it is a public company. It has listed non-convertible redeemable preference shares issued on a private placement basis. Same thing again, it's a public company. It has not listed equity shares on any recognized stock exchange, but it has listed non-convertible preference shares which were issued on a private placement basis. Concept number 2 guys over here, even though something is listed, it will still be considered as if it is an unlisted company. Okay, third point is the most important adjustment over here. Listen carefully. PRS Limited. Again, by looking at the name itself, you can say that this is a public company. It has not listed equity shares on a recognized stock exchange, but equity shares are listed on a stock exchange in a jurisdiction specified in section 23(3). It's a public company. It's a public company. It has not listed equity shares in a recognized stock exchange. Instead, it has listed its equity shares in a section 23(3) stock exchange. 23(3) stock exchange means what? A stock exchange which is in a foreign jurisdiction. A stock exchange which is in a foreign country. It has not listed in recognized stock exchange. It has listed only in section 23(3) stock exchange. This will also be considered as unlisted. This will get covered in, one second. Here, this will get covered in this fourth situation here. It's a public company. It has not listed equity shares in recognized stock exchange, but it has listed equity shares in section 23(3) stock exchange. Even though something it has listed, we will still consider it as unlisted company. Alright everybody, perfect understanding? Yes, so this was a listed unlisted discussion. Alright, come on. Let's go ahead. Let's not break our flow. Let's go to our next discussion now, which is about small companies. Extremely important from the examination point of view. Small companies, and then later in LLP you have small LLPs also. We will compare both when we come to LLP chapter. Okay. For now, let's quickly discuss about small companies. Small companies, they are those companies whose paid up share capital is not more than 50 lakh rupees, but but the central government has a power to increase this limit up to 10 crore rupees, and the central government has exercised the power and they have increased the limit to 4 crore rupees. So this is going to be our main number over here. Paid up share capital of the company should be within 4 crore rupees and turnover has to be up to 40 crore rupees. So small company means what? Any company which has a paid up share capital of not more than 4 crore rupees and a turnover of not more than 40 crore rupees. If it's a small company, it will enjoy a lot of relaxation from the Companies Act. Multiple provisions in the Companies Act will not apply to small companies. Like for example, small companies don't have to prepare cash flow statement. Then for small companies, the annual return is an abridged form. It's a shorter version, it's a summarized version. So they enjoy a lot of relaxations under the Companies Act 2013. Okay, but however, there are 4 companies which, even if they fulfill this criteria, they will still not be considered as small companies, which means there are 4 situations where even if the company fulfills this criteria, it cannot enjoy the small company benefits. What are those 4 companies? Number 1, holding companies, subsidiary companies. Number 2, Section 8 companies. Number 3, statutory companies. And number 4, your public companies. So these companies, even if they fulfill this criteria, still they will not come under the small company category. Okay, so come on, tell me the numbers now. Small companies are those companies whose paid up share capital is up to 4 crores and turnover is up to 40 crores. Okay, but does not include holding company, subsidiary company, public companies, Section 8 companies and statutory companies. I'll tell you where the mistake happens now. In the examination, this number students very beautifully they remember. But you know what will happen? The question will start by saying the company is A Limited. A Limited paid up share capital is within the limit, turnover is within the limit. Is it a small company or not? Be careful. Don't look at just the numbers. Also look at the company's name. Looking at the company's name itself, you are able to say it is a public company. So if it is a public company, I don't care about the numbers. A public company can never be a small company. Right? So whenever it's a small company concept, remember this mistake which your seniors have made, this mistake which you will not be making, and that is you will not only look at this criteria, you will also remember to check the exclusions, remember to check the name of the company, because if it is a public company, then even if it fulfills this criteria, it cannot come under the small companies bucket. Alright everybody, so this was a small companies discussion. Now relating to this, I have a descriptive question for you. Let's have a look at this. It's an examination question. The question says H Limited is the holding company of S Private Limited. So H Limited is the holding company, S Private Limited is the subsidiary company. Wait. Even before we go ahead, here itself, are you able to make an observation? Are you able to apply some concept over here? Think. Come on everybody. See, I have a private company which is a subsidiary of a public company. So now which concept will you apply? You will apply the concept of deemed public company. It's a private company which is a subsidiary of a public company. Even though it is a private company, we will treat this company as if it is a public company. This will become a deemed public company. Okay, so the question says H Limited is holding company of S Private Limited. As per the last P&L account for the year ended 31st March 2022 of S Private Limited. So they are giving us information about S Private Limited. Its turnover was 1.80 crores, which means turnover is within 40 crores, and paid up share capital was 80 lakh rupees, which means paid up share capital is within 4 crores. So both your conditions are fulfilled. The board of directors wants to avail the status of small company. Tell me guys, can S Private Limited be considered as a small company? Yes or no? I'll tell you the answer. The answer is no. Give me your reason. According to me, there are 2 reasons. There are 2 reasons why this company is not a small company. See, even though it is fulfilling the criteria, still it is not a small company because number 1, it is a public company. We just discussed, right? Deemed public company. If it's a public company, it can't be a small company. And one more reason, holding company, subsidiary company also can't be small companies. So both of these reasons because of which this company cannot be considered as a small company. Alright, are you following? Yes, so this was your next discussion under your types of companies concept. Alright, see, types of companies, basic chapter guys, but are you noticing the kind of complication that is involved? Yes, so these are the kind of twists and turns I wanted you all to prepare for, alright, and that is why if you see in these sessions I am not discussing just the easy questions, I am not discussing just from the top, right? We are going into the nitty-gritties, we are trying to think in the way the examiner will think while making the question paper. These little things, okay, these little tips and tricks, remember, so that you're able to ace your paper a little better. Alright, come on, come to our next discussion now. Two concepts we have to learn guys. One is Section 8 companies and the other is your government companies. Just two more concepts left, but a lot of questions are still left. Okay, come on, don't lose your patience. Listen to me. Our next discussion is going to be about Section 8 companies. So when it comes to Section 8 companies, they are by nature public or private. I've already told you this. See, you remember this discussion? One-person companies are by nature private companies. Section 8 companies are by nature public companies. So Section 8 companies by nature they are public companies, which means that wherever separate provisions are given for Section 8 companies, those special provisions we will apply. Otherwise, whatever provisions are applicable to public companies will also apply to Section 8 companies. They are by nature public companies. Okay. Then comes the second special point about Section 8 companies. There's a very unique point about Section 8 companies, and that is, unlike any other type of company, Section 8 company requires a license from central government to be incorporated. That is why Section 8 companies are often also called as licensed companies, because they require a license from the central government. But central government has now delegated this responsibility to the ROC. So today if I have to incorporate a Section 8 company, I will go to the ROC for the license and not to the central government. Okay. So point number one, they are by nature public companies. Point number two, the most unique point about Section 8 companies is that they require a license from the central government to be incorporated, and that is why they are also called as the licensed companies. Central government has delegated this work to ROC. Third point, the most important point under Section 8 companies, which is Section 8 companies have two prohibitions. See, first of all, these companies are created with a charitable motive. Charitable motive means, first of all, they will not even have any motive of making profit. But by chance, they end up making any profit. Can they distribute that profit as dividend to the shareholders? The answer is no. They are prohibited from distributing dividends. They cannot distribute dividend to the shareholders. So by chance, if they make any profit, what should they do with the profit? They should apply the profit in the charitable objectives itself. Alright. Second prohibition is that, see, in case the company goes into winding up, alright, if the Section 8 company is winding up, one step in the winding up process will be liquidation. Right? In liquidation step, what happens? The company will see what are the company's assets. With the assets, the company will repay its liabilities, and even after repaying liabilities, if the company is still left with any assets, we call them as a surplus assets. These surplus assets, generally a company distributes to its shareholders. But however, in a Section 8 company, these surplus assets, the company is prohibited from distributing the surplus assets to the shareholders. So a Section 8 company has two prohibitions. Prohibition number one, it cannot distribute its profits as dividend, and prohibition number two, in case it has any surplus assets at the time of liquidation, even that cannot be distributed to the shareholders. Okay, then what to do with the surplus assets? The surplus assets will be donated to another Section 8 company. The understanding what to do if the company is having profits, the profits will be applied in the company's charitable objectives, and what to do if the company is having surplus assets, the surplus assets will be donated to some other Section 8 company. Alright, then comes your fourth concept relating to Section 8 companies. Section 8 companies and government companies, okay. In both of these, there is a common point, and that is, it is not mandatory. It is not mandatory to put the word limited or the word private limited in its name. The same concept is there in Section 8 companies also, in government companies also. The concept is, it is not mandatory for these companies to put the word limited or private limited in its name. This is your fourth concept. Then comes your fifth concept. In case it's a Section 8 company, even this is a company, right? So even this will have MOA and AOA. And generally, if you want to alter the MOA and AOA, Special resolution has to be passed. Sometimes central government approval is required, like for example, name alteration and all. But however, in a Section 8 company, any kind of MOA, AOA alteration, central government approval is required. Just SR is not enough. Central government approval also is required. But again, central government has delegated this work. If you are altering your MOA, central government approval is not required. Instead, RD approval is required. Okay. If you are altering your AOA, then ROC approval is required. Central government approval is not required. Okay, so any MOA, AOA alteration, generally SR alone is enough. But in a Section 8 company, an SR alone will not be sufficient. We also need central government approval, but central government has delegated this work to RD and ROC as the case may be. Then listen, generally a firm cannot be a member in a company. Generally, a partnership firm, for example, cannot be a member in a company, but there is an exception. In a Section 8 company, the firm can be a member. This is another point, that a firm can be a member in a Section 8 company. Alright. Then comes your last and another very important point under Section 8 company, revocation of license. Before I start this, let me give you a revision of these points once again. Alright. First of all, I told you Section 8 companies formed for charitable objectives. Then I told you by nature they are public companies. Then what's unique about Section 8 companies? To incorporate Section 8 companies, what do you need? A license. License from whom? Central government. Central government has delegated this work to whom? To the ROC. That is why these companies are also called what? Licensed companies. Then how many prohibitions? 2 prohibitions. First, they can't distribute their profits as dividend. Second, they can't distribute their surplus assets to the shareholders. But so what to do if they have profits? Apply the profits in charitable objectives. What to do if they have surplus assets? Donate those surplus assets to another Section 8 company. Then there's a common point between Section 8 companies and government companies. What is the common point? Both of these companies, it is not mandatory to put the word limited or private limited in its name. Then MOA, AOA alteration, generally what is required? SR only is required. But however, in a Section 8 company, to alter the MOA or AOA, we also need central government approval. Alright, central government has delegated this work to whom? To RD when it comes to MOA and to ROC when it comes to AOA. See, in our regular batch and all, I've discussed with you that why central government approval and all that is not required from exam point of view. I am keeping this entire discussion 100% exam oriented. Alright, so I'm just discussing with you points which are relevant from the exam point of view. Listen to me now. Coming to our next discussion, I told you, generally a partnership firm cannot be a member of a company, but in a Section 8 company, yes, even a partnership firm can be a member allowed. Alright, come on now. Let's come to the last concept under Section 8 company, which is going to be all about revocation of license, which is cancellation of license. See, to incorporate a Section 8 company, we need a license. But there are 4 situations when this license will be cancelled. This license will be revoked. Understanding? I'll repeat again. To incorporate a Section 8 company, we need a license. Only then we can incorporate a Section 8 company. But however, there are 4 scenarios where this license will get revoked, this license will get cancelled. Now, who will revoke? Who will cancel? See, who issued the license? Central government issued the license. It was delegated to ROC. Who will cancel the license? The central government will cancel the license. It is delegated to RD. See, remember the delegations very, very carefully, okay? There are 2 people only to whom it is delegated. Either it is delegated to ROC or it is delegated to RD, right? See, issuing the license is delegated to whom? ROC. Then revoking the license is delegated to whom? RD. Then MOA alteration, you require approval delegated to RD, and AOA alteration, you require approval delegated to ROC. Remember like this. So issuing license ROC, revoking license RD. MOA alteration RD, AOA alteration ROC. Okay, now come back. So I was telling you that there are 4 scenarios in which the Section 8 company's license will get revoked. What are those 4 situations? I'll zoom it for you a little bit. One moment. I hope you're able to see this a little better now. Yeah, listen, look at this now, this part. There are 4 situations where the license will get revoked. Number 1, see, the Section 8 company was given license, right? On that basis only it was incorporated. That license will come with terms and conditions. If those terms and conditions are violated, the license will get revoked. First situation, when will the license get revoked? When the terms and conditions are violated. Second, if the Section 8 company is conducting its affairs fraudulently, if it is doing any fraud. Third, when the Section 8 company is violating its object, it is supposed to be a charitable company. It's supposed to be having charitable objects. But if it starts doing business, if it starts doing activities with profit motive, it is violating its object. If it is violating its object, the license will get revoked. And number 4, the fourth situation, when the company's affairs are prejudicial to the public interest. Like for example, if the Section 8 company is doing terrorism activities, if the Section 8 company is trying to create unrest in the company, if it is doing anything which is against public interest, in these 4 situations, the license will get revoked. The license will get revoked by whom? The license will get revoked by the central government, but the central government has delegated this work to the RD. Okay, now if the central government or RD, as the case may be, if they have decided that license has to be revoked, what will they do? They will send a written notice to the Section 8 company, a written notice telling the Section 8 company that we have an intention of revoking your license, and they will also give an opportunity of being heard to the Section 8 company. Once the license is revoked, after that, there are 3 options. Are you understanding? So we will go step by step, okay. First of all, how many situations when license will get revoked? 4 situations. What are those 4 situations? Either terms and conditions are violated, or company is conducting its affairs in a fraudulent manner, or company is violating its objects, or it is doing something which is prejudicial to public interest. 4 situations, license will get revoked. Revoked by whom? Central government. Central government has delegated this to whom? To RD. To revoke the license, what is the process? Central government or RD, as a case may be, they will send what? Written notice. To whom? To Section 8 company. What will they write in this written notice? They will write that we are intending to revoke your license. But can they directly revoke the license like that? No. They have to give opportunity of being heard to the Section 8 company. All this is done, let us say. License is revoked, let us say. What next now? Once the license is revoked, what will happen? 3 options. Out of these 3 options, any one option will happen. Either that Section 8 company will get converted into public company or private company. Accordingly, name will change. If it's a private company, private limited will be added in the name. If it's a public company, the word limited will be added in the name. Okay. First option, that Section 8 company will get converted into public or private company, and name will also get changed accordingly. Second option is that this Section 8 company will get amalgamated. It will get merged with another Section 8 company having similar objectives. Third option is wind up the company, wind up the Section 8 company. Again, same problem now. If you wind up the Section 8 company, there will be liquidation. In liquidation step, what if there are surplus assets? Surplus assets can't be distributed to shareholders. Then what to do with surplus assets? In such cases, same thing. Either the surplus assets will be donated to another Section 8 company having similar objectives, or the company will sell away the assets, get money and donate that money to IBF, Insolvency Bankruptcy Fund, under Insolvency Bankruptcy Code 2016. Okay, I've tried giving you a revision, but a sort of an in-depth revision trying to cover as many points as possible over here. So once the license is revoked, what next? 3 options. What are the 3 options? Either the Section 8 company will get converted into a public company or a private company and name will get changed accordingly, or the Section 8 company will get amalgamated with another Section 8 company having similar objectives, or the Section 8 company will get wound up. If it is wound up, there will be liquidation. In liquidation step, if there is surplus assets, either the surplus assets will be donated to some other Section 8 company having similar objectives, or those surplus assets will be sold, and whatever proceeds we get, those proceeds will be donated to IBF under Insolvency Bankruptcy Code. What is IBF? Insolvency Bankruptcy Fund. What is IBC? Insolvency Bankruptcy Code 2016. Okay, so these were all your 7 concepts under Section 8 companies. Now with all these concepts in your mind, we have one question to discuss. But before we go to the question, one small concept test. Tell me. Let's see if you're able to answer this. Can a Section 8 company be incorporated as OPC? Correctly tell me. We've done this in our last session, so much in depth. Can a Section 8 company be incorporated as a 1% company? You remember? We had learned that 1% company can neither be incorporated as a Section 8 company nor can it be converted into Section 8 company. Remember, we said 1% company means it should have profit motive only. So can it be incorporated as a 1% company? No. Section 8 company cannot be a 1% company. 1% company has to be profit motive only, can't be charitable motive. Then, can Section 8 company be a small company? Just now we learnt. Small company, 4 exclusions: holding subsidiary company, Section 8 companies, statutory companies and public companies. So can a Section 8 company be a small company? No. Just trying to interconnect concepts. Okay. This is a new point now. Can a Section 8 company be an unlimited company? No. It can be a guarantee company, it can be a limited company, but it cannot be an unlimited company, not allowed. Okay. Now answer this point carefully. Can the following be formed for charitable objectives? Can a company be formed for charitable objectives? Yes, that is what a Section 8 company. But partnership firm and LLP cannot be ever formed for charitable objectives. Partnership firm and LLP for both profit motive is mandatory. Okay, so this was your quick revision of all the relevant concepts under Section 8 companies. Now let's take up a question. So the question says, one of the matters contained in the articles of Dhiman Foundation incorporated as a limited company under Section 8. So Dhiman Foundation is a Section 8 company. So one of the matters contained in the articles, so the AOA of the Section 8 company was altered by passing an SR in its general meeting, and thereafter intimation for the same was given to ROC. However, such alteration in the AOA was opposed by Dwaj and Co., a partnership firm which is its member, that such alteration was not valid. Come on, tell me. Point number 1. It's a Section 8 company, right? The Section 8 company's name is Dhiman Foundation. In the Section 8 company's name, private limited is also not written, limited is also not written. Is that okay? Yes. In a Section 8 company, it is not mandatory to put the word limited or private limited. You know very well. Point number 2. This Section 8 company is incorporated as a limited company. Is that okay? Yes. It can either be a limited company or it can be a guarantee company. It cannot be an unlimited company. Okay. Point number 3. This company's AOA was altered simply by passing SR. Is the AOA alteration valid over here? No. AOA alteration is invalid. Remember, we learned in a Section 8 company, if MOA or AOA has to be altered, we require central government approval. But central government has delegated for MOA alteration to the RD and for AOA alteration to the ROC. So just SR is not enough. They need the respective approvals also. Then tell me the fourth thing. Tell me, in this Section 8 company, one partnership firm is a member. Is that okay? Generally, a firm cannot be a member in a company, but in a Section 8 company, yes, even a firm can be a member. Here they are asking only about 2 things, but total 4 observations I made for you in this question. First of all, no limited, private limited, those words are not there in the name, it's okay. Then it's a limited company, yes, it's okay. Then is AOA alteration valid? No, they require ROC approval. And can firm be a member of a Section 8 company? Yes. Alright guys, so we spent 15 to 20 minutes on this one Section 8 company concept. Nice and thorough. Yes, be very careful. One more question I have for you. Be very careful about this MOA AOA alteration point. MOA delegated to RD, AOA delegated to ROC. Alright, come on. Come to the next question now. One last question. No, we have 2 more questions on Section 8 companies. State Cricket Club was formed as a limited liability company under Section 8 of the Companies Act 2013 with the object of promoting cricket by arranging introductory cricket courses at district level and friendly matches. So first of all, it's a Section 8 company. Again, same thing, the name does not have the word limited or private limited, that is okay. It's a limited liability company, even that is okay. It can be limited liability or guarantee company, but it cannot be unlimited liability. Then, club has been earning surplus. It's earning profits. Can it distribute this profit as dividend to shareholders? No, it's prohibited. Then what will the Section 8 company do with the surplus? It has to apply those profits in the promotion of its charitable activities. It is earning surplus. See, don't get confused. This is not surplus assets. It's earning surplus means it's earning profits. Of late, affairs of the company are conducted fraudulently and dividend was paid to its members. Mr. Cool, a member, decided to make a complaint with the regulatory authority to curb the fraudulent activities by cancelling the license given to the company. This company is doing affairs fraudulently. Because of this reason, license can get revoked also. So they're asking us 3 questions. First question. Is there any provision under the Companies Act to revoke the license? Is revocation possible? Yes, tell me everything now. First of all, it will be revoked by whom? Central government. Central government has delegated to whom? To the RD. How many situations in which license can be revoked? 4 situations. What are the 4 situations? Either terms and conditions are violated, or the company is conducting its affairs in a fraudulent manner, or the company is violating its objects, or the company is doing something which is prejudicial to public interest. In these 4 situations, a license will get revoked. How will the license be revoked? What is the process? Central government or RD, as a case maybe, they will send what? They'll send written notice to the Section 8 company. Written notice saying that they are intending to revoke the license. And then straight away can they revoke the license like that? No. They have to give the Section 8 company what? An opportunity of being heard. Okay. Now once license is revoked, after that what will happen? 3 options. Either the Section 8 company will get converted into public company or private company, and accordingly the name will get changed, or the Section 8 company will be merged, amalgamated with another Section 8 company having similar objectives, or this Section 8 company will be wound up. It will be wound up and surplus assets will either be donated to another Section 8 company, or surplus assets will be sold and the money will be credited to Insolvency Bankruptcy Fund under Insolvency Bankruptcy Code 2016. Again, revision happened of the whole revocation concept. Then they are asking us whether the company can be wound up. Yes, if the license is getting revoked, 3 options I told you, right? One of the options is winding up. So yes, can the company be wound up because of revocation of license? Yes, it can be wound up. If it is wound up, surplus assets point, that also you will write. Surplus assets will either be donated to another Section 8 company having similar objectives, or it will be credited to IBF, Insolvency Bankruptcy Fund. Then they are asking whether the State Cricket Club can be merged with Coolnet Private Limited, a company engaged in networking business. Is merger possible with another private company having profit motive? See, either the company can be converted into a public or a private company, or it can be merged with another Section 8 company, right? But can it be merged with another company which is doing profit activity, business activity and all? No. See, either it should be converted into a private company or it should be merged with Section 8 company. Can you merge it with another private company doing business? No, that merger is not going to be allowed. So this entire question was about revocation of license. So first of all, can the license be revoked? Yes, 4 situations you will write. Then if the license is revoked, will this company be wound up? Yes, it will be wound up. It can be wound up. 3 options we have. Third option is winding up. And then can it be merged with another private company with business activities? No. It can be merged only with another Section 8 company having similar objectives. Alright. So this was question number 20, a nice interesting question. All of these are examination questions, guys. They've also been asked in RTPs and MTPs. If you see, this is a May 2021 5 marks question. It has also come twice in MTPs. Alright, come on. Come to the last question under Section 8 companies now. It's an MCQ question. Where a company is granted license under Section 8, it is not required to use the word dash even though it is a limited company. It is not required. I just told you, right? Section 8 companies and government companies, they don't have to use the word limited or private limited in its name. Not mandatory for them to use these words. Alright. So this was it about your Section 8 company discussion. Nice solid discussion we're having. Come on now. One small concept I want to discuss with you and then 2 questions I'm left with. Alright. Listen to me. See, when it comes to government companies, we know very well that they are those companies wherein at least 51% of paid up share capital is held by central government or state government or both. See, the reason why I'm discussing this with you is, I need you to make an observation. When we discussed about holding in subsidiary companies, here we said that more than 50% of total voting power is being held by the holding company. When we spoke about associate company, here we said at least 20% of total voting power is held by another company. But in government companies, we are saying that at least 51%, first of all, it is not more than 50%, it is at least 51% of not total voting power, here it is paid up share capital. Okay, so government companies are those companies where at least 51% of paid up share capital is held by central government or state government or both. And even here we have the concept of deemed government company, very similar to your deemed public company concept. Deemed government company means, for example, you have a government company and you have a non-government company. Okay, this government company is a holding company, this non-government company is a subsidiary company. So any non-government company which is a subsidiary of a government company, even though it's a non-government company, it will be deemed to be as if it is a government company. Same thing like deemed public company concept, guys. It's actually a non-government company, but it is a subsidiary of a government company. So even though it is a non-government company, we will treat it as if it is a deemed government company. Okay, so this observation is clear. In government company, at least 51% of paid up share capital should be held by central government or state government or both, and government company also includes deemed government companies. Alright, and here I already told you that section 8 companies and in government companies, it is not mandatory to put the words limited and private limited in its name, not mandatory. Okay. Now let's come to the questions. I have the last two questions left for you. This question will involve a new concept which I have not discussed with you in the revision till now. Let's read the question first. The question says, Anshul and Nikita are husband and wife. They are engaged in the business of trading of handloom items. They purchase handmade bedsheets, towels, napkins and other related items from Solapur, Maharashtra and sell them in Rajasthan. One of their friends suggested them to form a private limited company. By corporatizing their business, they will be having more recognition and may also be able to export such handloom products. So they formed a company in the name of Anshul Textiles Private Limited. So first of all, it's a private company. All this information was unnecessary. Only relevant information for me is I have two people, husband and wife, Anshul and Nikita, two members. These two members have formed a private company in which they both were the only members. They used to get the handloom work on job basis from workers according to the demand and then sell them in the Indian market as well as exporting the same. Company also availed a line of credit facility from the bank to the tune of 20 lakhs. So this company has 20 lakhs of loan also. Okay. Anshul used to travel to different places in order to search for the new market. One day the aircraft in which he was travelling crashed while landing at the Mumbai airport. All passengers including Anshul died. Now Nikita was the only member in that private company. Section 3A. Section 3A says, in a private company you need minimum 2 members. In a public company you need minimum 7 members. In case by chance something happens because of which the number of members in the company falls below the minimum number, then section 3A will apply. Like over here, it's a private company. Originally we were having proper 2 members, but 1 member died. So now we are left with only 1 member, which means we have less than the minimum number of members. Section 3A will apply. Section 3A says that in such cases, the company will get 6 months time. Within 6 months, the number of members should again reach the minimum number, which means there should be 1 more member who is included within 6 months time. We should reach the number of members we should reach to 2 within 6 months. Within 6 months, if we are able to do it, great. But if 6 months have lapsed and still if we have less than the minimum number, then there will be a consequence. The consequence will be whoever is a member of the company, that member will now become severally liable. Severally liable means this member is now going to be personally liable for the company company's debts. But which debts of the company? This member is going to be personally liable for those debts of the company which the company has contracted after the 6 months period. So after the 6 months period is over, after that if the company borrows any loan, for those loans the existing member of the company will become personally liable. Company will not be liable anymore. That member only will become personally liable. Okay, so this is section 3. I'll repeat once again. If the number of members falls below the minimum number, then we get 6 months time to bring the number back to the minimum number. If you're able to do it, great, then life as usual. If 6 months have lapsed and still the number of members in the company is below the minimum number, then whoever are the members of the company, they will now be severally liable. That is, they will now be personally liable for company's debts. But which debts of the company? Those debts which the company has borrowed after the 6 months period. For those debts, these members will now become personally liable after the 6 months period. Okay, with this knowledge, look at this question now. After the death of Anshul, for how much time period Nikita can carry on the business of the company without incurring any personal liability on her part for the debts of the company? So Nikita can carry on the business of the company without incurring personal liability for how long? Up to 6 months. If she alone continues the company for more than 6 months also, only then personal liability will be attracted, right? Up to 6 months she can carry on the company with just herself in the company. She can carry on up to 6 months. In these 6 months she is not going to be personally liable for the company's debts. Only after the 6 months period only she will be liable. Okay, and even after 6 months she will be liable for which debts? You understood? She will be liable only for those debts which the company is borrowing after the 6 months. Only for those debts she will be liable after the 6 months. Alright, so this was a question solely targeting section 3A. Alright, and now comes one last question, this question number 15. This is like your master question, alright. It will cover so many concepts, this one question. This is a question which you should be seeing even the day before your exam. See, the question says, following are some of the securities issued by different companies related to each other. So they have given us information about 3 companies. And they are asking us whether the aforesaid companies can be considered as listed companies or not, and what is the relationship between the companies. Let's keep these 2 questions in mind as we read this whole discussion. So first of all, we have Klesh Rahit Limited. Looking at the name itself, you can say that this company Klesh Rahit Limited is a public company, right guys? It's a public company. It has listed non-convertible redeemable preference shares issued on private placement basis. So it has not listed equity shares in a recognized stock exchange. It has only listed non-convertible preference shares issued on a private placement basis. Remember our listed unlisted company discussion? Even though it has not listed equity shares, it has listed non-convertible preference shares issued on a private placement basis. Even though something is listed, I will consider this as an unlisted company, right? And it has the power to appoint 2/3 of the directors in Indriya Daman Limited, which means it has the power to appoint majority of the directors of Indriya Daman Limited, which means it has the power to control the composition of board of directors of Indriya Daman Limited, which means Klesh Rahit Limited becomes the holding company and Indriya Daman Limited becomes a subsidiary company. Till here clear? Yes, so this one para has given us quite a lot of observations. Klesh Rahit Limited is a public company. It's an unlisted company. It is controlling the composition of board of directors of Indriya Daman Limited. Therefore, Klesh Rahit Limited has become the holding company of Indriya Daman Limited. Okay, now let's come to Indriya Daman Limited. This company, also looking at the name itself, we can say that even this is a public company, right? And this company has listed non-convertible debentures issued on a private placement basis. Same thing, it's a public company. It has not listed equity shares on a recognized stock exchange, but it has listed non-convertible debentures issued on private placement basis. Again, go back to our listed unlisted discussion. Even though something is listed, we will still treat this as if it is an unlisted company. Okay, then the question says that this company is holding 60% voting power in Sajakta Private Limited, which means this company is holding more than 50% of the total voting power in another company. So now this company Indriya Daman Limited will become the holding company and Sajakta Private Limited will become the subsidiary company. Right. Now, one more observation. Sajakta Private Limited is a private company, but it is a subsidiary of a public company. So, even though it is a private company, because it is a subsidiary of a public company, even though it is a private company, it's going to become a deemed public company. And one more thing now, Kleshrahit Limited does not have direct control over Sajakta Private Limited, but the Kleshrahit Limited's subsidiary company does have control over Sajakta Private Limited. So, a deemed subsidiary concept will also apply, because of which Sajakta Private Limited will not only be the subsidiary of Indriya Daman Limited, it will also become the subsidiary of Kleshrahit Limited. Don't worry, okay, this entire question, I know you will be wondering, ma'am, how will we present in the examination? This question is there in those 30 questions writing practice I was telling you, right? This question is there. It will get covered there once again anyways. So right now focus on understanding the question. Alright. So Sajakta Private Limited deemed subsidiary concept will also apply. It is not only the subsidiary of Indriya Daman Limited, but it is also the subsidiary of Kleshrahit Limited. Okay. Then the question says this company has listed non-convertible debentures issued on a private placement basis. Again the same thing. It's a public company, deemed public company. It has not listed equity shares in a recognized stock exchange, but it has listed debentures issued on a private placement basis. Even though it has listed something, I will treat it as if it is an unlisted company. Then the question says that this company Sajakta Private Limited is holding 52% equity shares in Pratibodh Limited as an investment on behalf of another company in the capacity of a trustee. So Sajakta Private Limited is holding 52% equity shares in Pratibodh Limited as a trustee. So can I say that Sajakta Private Limited is holding company of Pratibodh Limited? No. You remember when we are checking whether holding subsidiary relationship is there or not, in that checking we will not consider the shares which are held as a trustee. So Sajakta Private Limited is holding more than 50% equity shares, but only as a trustee. So this will not be relevant for us. Sajakta Private Limited is not the holding company of Pratibodh Limited. There is no holding subsidiary relationship because the holding is only in the capacity of a trustee. Alright guys, so now coming to the question says whether the aforesaid companies can be considered as listed companies. We've already concluded Kleshrahit Limited is also unlisted, Indriya Daman Limited is also unlisted, Sajakta Private Limited also is unlisted. So are they listed? No, all of them are unlisted companies, all the three. Then they're asking us what is the relationship between the companies. Relationship also we have spoken about. Kleshrahit Limited is the holding company of Indriya Daman Limited because it is controlling the composition of directors here. Indriya Daman Limited is a holding company of Sajakta Private Limited because it is holding more than 50% of total voting power over here. Also, Sajakta Private Limited is also the deemed subsidiary of Kleshrahit Limited. Even though Kleshrahit Limited does not directly have any relation with Sajakta Private Limited, but the subsidiary Kleshrahit Limited's subsidiary has control over Sajakta Private Limited. So Sajakta Private Limited will not only be the subsidiary of Indriya Daman Limited, it will also become the subsidiary of Kleshrahit Limited. Alright, nice interesting question this was. Can you count how many concepts are covered in this one question? See, your public private company, that concept, listed unlisted company, even that concept is covered here. Your deemed public company concept, deemed subsidiary concept, holding subsidiary is nicely being tested. Good 5-6 concepts are covered in this one question. This question has not been asked in the examination till now. It has been an RTP question only. Okay, so I think with this we are nice and thorough with our entire discussion on the kinds of companies. Generally we do see one question from this chapter guys, and the reason why we spent so much time to do this chapter properly is because see, this is one of those discussions where, you know, if you have nice solid understanding, one question will definitely be there in the question paper, right? So if you have nice solid understanding, that can become your strength question. Alright, see, when it's an easy chapter, when it's a simple chapter, you should do it even better, because those kind of chapters, less to study, alright, good number of marks when compared to the amount you have to study, and high scoring. So these kind of chapters should be your strength chapters. That's why if you see in class, we have seen 12 descriptive questions, 6 MCQ questions just in kinds of companies. And if you look at your handout, you have 8 more homework questions in descriptive, you have 8 more homework questions in MCQ. Total 34 questions in just the different types of companies. With these 34 questions, everything which is possible to be asked in your examination I've covered. Not just these questions, other concepts which have not been covered in these questions but are relevant from exam point of view, even that I have covered in the revision and all. Alright, so I think we've done a nice combination of revision also, questions also. You're nice and thorough. We'll close this chapter over here. In our next session, we'll take up the incorporation discussion and the MOA AOA chapter. Same way, we'll do the concept revision and then discuss the questions as well. So that's it. We'll meet again in the next session. Until then, keep leveling up, keep smiling, keep learning. Bye-bye.